Dude, I haven't done that in a while. I'm here. Jesus, I haven't done that in a long time. Hi guys, how you doing? So what was I saying? I said I think democracy is actually going to be okay. I love the beat, and I don't want kids to have puberty blockers because I think they're going to be just fine without them. A 6-year-old should not be able to modify who they are when they don't know who they are. You can call me a radical, okay? It's cool. It's cool. All right, so we got a lot to talk about today, guys. We got Trump updating over the weekend and letting people know that the tariff, removal for chips and smartphones and all the other stuff was not really a removal. It was reclassification, and we're going to be getting greater details probably in the next week or so about them coming back and being, specific standalone tariffs within the next 1 to 2 months. I actually think that's perfectly fine. I think it's smart to delay it. I think it's smart. I think you're going to see a pattern around Trump, guys, where we push everything out and then we pull it back and then refine it based on feedback. That's the way like a lot of good business people react. And you got to remember, you've got Elon Musk hanging out with Trump all the time, probably giving him tons of advice along the way. So I think expect more of that. But after that news, China after the USA halted all tariff, China said that the USA should halt all tariffs. Then Howard Lutnick, everybody hates Howard. I actually love him. Said that basically released the news of it's coming back in 1 to 2 months. Then China halted rare earths after Lutnick's comments, and I actually think that's brilliant, and I think that that's going to be a good thing in the end, and we're going to talk about why that is. Also, I think you should understand that the trade war against the world that everybody's been complaining about is not against the world. We actually have 130 countries now negotiating with us to remove trade barriers and probably just to get more favorable terms than they have right now. That's a great number out of the 180 or so that were tariffed. Then at the same time, we got Bitcoin, if you look over in the corner, continuing its perfect bounce. Again, if you just look over here, you can see where we hit that 4-year trend. We hit it again. We bounced off of it. We broke above our downward trend line that started all the way back in January. And then we turned that into support. I actually called the move to 86,000 perfectly over the weekend. I said we were going to go to 86. We went exactly to that. Now I'm saying, I said that, I think we could actually even get to 91 today. I don't know if that'll happen today. It might take a little bit longer, but that is the next location where we want to drop into the trough on the volume profile if you look down in the corner in that yellow and blue. So I could see that happening pretty quickly here. Pre-market is bouncing and looking pretty good today, especially in the Bitcoin side of things. I bought SMCI calls last week. They're up, the actual underlying is up about 5% today because of this positive tariff news. I'm loving that. And then let's see here. So here's what I'm thinking for this week. I'm thinking that we're going to see more deals, potentially discussions about countries coming to the table, what we're going to be getting from it, how it's going to be benefiting America. I would also expect that with companies, like what we saw over the weekend with TSMC saying that they're going to be spinning up a third plant in the United States. Also, the gold card is supposed to be coming out this week, so we should be hearing about that. And then we'll talk about how a breaking dollar fixes all things and a lot more. I wanted to start off right here real quick. Let's see. MST is next. Yeah. The MSTX is probably looking pretty good today. It's probably up almost 7% because MicroStrategy's up about 3.5%. Mara's up 4%. CleanSpark's up almost 4%. Iron's up 3%. Tesla's up almost 2%. It's going to be a good day, guys. It's looking like a really good day. Really good day across the board for markets. Just continuing, because again, the news is positive, right? So we know that there is going to be a refined package that's going to deal with, pharmaceuticals. We're going to be seeing, all the stuff about chips, smartphones, all that kind of stuff. But those won't be going into effect for several months, right? And then at the same time, we got the 90-day pause on the rest of the world outside of China. I think people are realizing that this trade war is with China. It's us against China. That is what it is. I wanted to talk about a few things, though. I'm seeing so much pessimism all over the place. So much pessimism. Everybody's like, oh, Trump is stupid. Howard Lutnick's stupid. All these people. Navarro is actually kind of stupid. But I want to speak to, I want to just kind of bring things back to the basics here. So JP Morgan, the original JP Morgan, He told his son, and this is paraphrasing, that one of the dumbest things you can do is to bet against America. We know we've heard that same kind of thing from Warren Buffett, never bet against America. But yet that's all I see right now from people is betting against America. And so I put in this post, I said, why would you bet against America? Why are you so negative about what's happening in the US when we're pushing for deregulation? We're becoming more fiscally responsible with our efforts like Doge. We're aggressively automating legacy systems in government. We're looking to lower taxes at one of the largest, fastest rates in history. We're releasing the gold card this week now. We're negotiating better deals with, well, I got to up this, 130 countries now. We're arresting and deporting criminals. We're securing our borders at levels not seen in a very long time. We're putting pressure on China that's long overdue. I said, you guys do you, but I know where my money's at. Not that we can't have problems along the way, but rapid shifts do cause waves. But I'm not betting against America. And at the worst, Bitcoin is an amazing hedge because it's just a better version of gold. And the gold is run. People are talking about 4,500 gold now. And I think that's just a really bad decision. We have tons of gold. We could later just dump that. And if the trade war got too sophisticated and complicated, and we could put a lot of that money in Bitcoin, and we would really do damage to China. Probably take out some collateral damage in other people too. But again, I don't know if we have to go that far. I do know that bond yields are coming down today. We could see that. Let me just pop this over here real quick. We could see that in the 10-year. So again, it had that nice little spike, but still a lower high. And then at the same time, we have that in the 2-year, maybe not as pronounced, but a little baby drop. So again, we were up here in the 4.04 range. We're down to 3.9. That's getting in a better place. So despite what everybody's been talking about, these things are coming back to earth. And they're, again, like everybody was making much to do about the bond deals being insane last week. I would argue that they were just not that crazy. And then I want to pull over here and look at the dollar too. The dollar is continuing to roll over like we've talked about. This rising, that megaphone pattern, broadening wedge is breaking down hard. The measured move gets us roughly to the 200 moving average on the monthly time frame. Again, we're at 99.41 right now. This is great. Bo, thank you for joining as a member. This is wonderful because what it does, it helps people that have, or companies that have international business do better, because a cheaper dollar means they're getting more of the other currency. And so they're doing better with their exchange rate. So you're going to see tailwinds behind companies like Tesla, where their exchange rate or foreign currency exchange rate is actually benefiting them now, whereas before it's been a problem. It was a problem if you look over here when the dollar was strengthening in 2021 all the way up into 2022. That was actually making it harder for them to make additional profits, from the other side of the world. But with a cheaper dollar, we're going to see more investment in the United States. We should see more tourism. It's down right now because, again, there's a very negative narrative being put out there about the United States. But I see that getting better in the not too distant future as some of that goes away. And again, just investment in the United States is going to grow, and our manufactured exports are going to get cheaper. So there's a lot of really beneficial things that happen from the dollar going down. And I want to show something else here real quick. Let's see, right here. So I did a post over the weekend. I showed the S&P, and I showed this on the monthly time frame because I just had to represent it that way. Otherwise, it looks like garbage. But I showed this based upon weekly performance, and I'm going back 17 years in our current trade channel since the 2008 Great Financial Crisis. And you can see when the weekly candle did what, and this is the representation, the green arrows of the weekly candle. When a weekly candle did well, it marked push towards all-time highs, like here, like here, like here, like here, like here, like here, like here. Do you think this time is different? How many can't? 1, 2, 3, 4, 5, 6, 7. We're on the 8th one over a period of 17 years. And the volumes look huge on it. We'll talk about that in a second too. They look really great. And my buddy actually, just, you know what, let's segue real quickly just into that conversation. I'm going to go back here a little bit. I want to look at some stuff that my buddy Seth put out there. I think Seth is a lot more liberal than I am, but I like the fact that he puts his politics off to the sidelines when it comes to finance. So Seth said this is the greatest weekly candle in volume I've ever seen. Didn't even see this at the COVID bottom. So if you look over here, he's showing the volume that we received this last week, and it was ridiculously good. So you got what I just showed you, where there's 8 of these candles, 7 of them previously over a period of 14 years, had or 17 years, my bad, have been nothing but recoveries, and it pushes towards an all-time high. And we're seeing that on the volumes too on the weekly candles with the S&P. Also, Seth Golden, Larry Fink, we may already be in a recession. He said at least 35 states need to be in GDP contraction to suggest economy is slipping into a recession. As of February, the state coincidence GDP informs only 3 states have contracting GDP. 2 of the states are the the least populated. So what they're saying here, and again, if you look down over here, the less than is North Dakota and Massachusetts. So what they're saying, and it's crazy to watch West Virginia and South Carolina blowing up. West Virginia is probably blowing up right now because of, again, cold country, and they're getting ready to fire it all back up. So that's a state that's been dreaming of days like today for a very long time. But I would argue that this is not recessionary, just like Seth has argued. And then also, Seth Golden, what a recession does not look like ever. Jobless claims remain near post-pandemic lows. I mean, look at this. There's no representation of a recession at all, even though I just got done listening to Morgan Stanley's Mike Wilson, who also called the Great Depression at the end of October, or I'm sorry, like around 2022, was talking about how the sky was falling at the end of the year. And then we ended up, having just a really great period into 2023 where everybody made a lot of money, including myself. I was up 600% that year after he said that we were going into like a deep recession. And now he's saying the same thing. So he's probably a good counter indicator of the fact that is in fact not happening. Now I want to get on to this discussion about rare earth elements. Let me get caught up with chat real quick. Even the penguins gave in. Yes, they did. They don't stand a fighting fucking chance, do they? They can't even fly. Elusive 270. Hey, Jesse, I've been seeing ChargePoint chargers all around my city to charge up Teslas. I was wondering what your thoughts. I think ChargePoint is shit compared to Tesla. And I don't even understand why a company like that exists. There will be competitors, and there'll be people that are willing to dump a lot of money into it. The alternative charger thing was a very, very big narrative. Was that 2023 or was it 2021? I can't remember anymore. It was a narrative for a while. Nobody cares. Nobody cares. It doesn't really matter. Can you imagine trying to scale against Tesla that literally has charging systems all across the world? I never like any competitor against Tesla. I always assume they're going to fail, and that's probably because 99% of them do. Gemini Knight, and again, just the Tesla itself. The Tesla, if you look at the Tesla, it's integrated with its own network. And so it will let you know where you can go, and it just does everything automatically. It's just a completely different experience. The only reason you would root for ChargePoint is if you think the competition are doing really well against Tesla, and I just do not see that in the current environment. Gemini Knight, hey, Jesse, can we have a look at call options for CleanSpark? Is now better to stay in stock? I'm 100% in options. We could look at them, but I think right now, when you were down 75% from the high, I think that was a pretty good indication that if you're going to go long, or I'm sorry, 74%, let me not exaggerate. If you're going to go long, that was probably the time to do it in options. And we're up, let me just see here, CleanSpark real quickly. So this has been a pretty crazy run. If you look at this, let's just go back here. Let's go to the weekly. That'll be a little bit better. So if you look where we were in March or November 2024. I'm sorry. So let me go back over here. So if we go back to March of last year, CleanSpark, and again, there's been dilution here, but it was at $24. And now it got all the way down to $6.50. That was probably a good time to buy. It's a great opportunity from here. Now we are up already. We are up a decent amount. Let's just see how much this thing is up. It is up 20% in a period of about a week. So the time to buy was probably down here when it was down 75%. I really like to go in at levels like that. I went in too early on these, but I like to go in at levels like that. I don't like to do it when it's run 20% in a week because the call options are probably pretty robust and have done well. Some of mine are even up, which is crazy. ARKG was just insane last week. I made $400,000 on Friday a decent chunk from ArcG, MSTX, all that stuff. We can try and look at that though. It's just, again, it's run really hard, so you got to remember that. All right, real quickly, let me just see what else we got. You're the man, brother. Thanks for all the work. You are welcome, Rose. Victor, good morning. History Guy Scalps selling $7 puts on TSLL is working nice. Well, that's a puts on a leveraged play. You're a brave person, but yeah, that probably will be all right. It probably gives you a lot of income. Luke Hart, still see BTC at 91,000 today? It could be. It's hard. I can't perfectly time things down to the day. There's so many things that can come in. It is at 85,000 and it's bouncing really good if you look at the chart down below here in the corner. So it looks wonderful, right? Like you love seeing that. You love seeing a bounce like that. So it definitely could. At the worst case, maybe 88 or something for a test. I could see that too. All right, so I wanted to get back to rare earth elements. So we got China suspends exports of certain rare earth elements crucial for the car and semiconductor and aerospace industries. So here's what I think they thought. I think they thought because we were taking tariffs off of semiconductors and all this stuff, that meant that we had some kind of weakness and vulnerability they could exploit. I don't think that's true. Not that they don't have a monopoly over the sector, but we'll talk about that a little bit more in a second. So I said, this is actually great news. Now we can create an executive order to get past the bureaucracy that prevents us from being able to mine and refine rare earth elements in the USA. We actually do, I'll talk about some numbers here in a second. We do mine a decent amount of rare earth elements. And let me jump to this Dimitri post because this is a really good one. He said, about the Chinese rare earth ban, refining of rare earth minerals is not a complex issue to solve. In fact, we have partially solved it already. Story time. Last year, I visited Mountain Pass mine in California owned by MP Materials. This is actually one of the biggest in the space right now. They have some regulatory issues that they're going through in the state of California. Who would have known? But I think that they're going to be able to overcome those probably with an executive order and Trump pushing now that we have this block. You can make it to where you're looking to do that. MicroStrategy, it looks like we have a purchase of 3,459 Bitcoin. Let me get over to that real quick. I want to pull that up and just get a post out. MSDR, let me see. Not Misgrow. Let me just get that post out super fast. Thank you for letting us know. Kind of knew that was coming, didn't we? Good enough. All right. Let's get back over here. So rare earth elements. So he said the unique thing about this mine is not just that it's producing 15% of the world's oxide, but MP Materials is also refining them out on site in an extremely clean way with no harmful byproducts or pollution. This is opposite of what China does. I wish I could share the photos, but you could eat off the floor there. He said, so why is MP Materials not refining everything that's coming out of the mine, but ships a lot of it to China today so that Chinese can dump on us? As soon as MP Materials went into the rare earth refining business a few years ago, the Chinese dropped prices to try and make it uneconomical and to preserve their valuable monopoly. If the price of the Chinese processed rare earths rises to market level or their ban to the U.S. persists, suddenly it will be profitable again to refine and process in America. This is great. So China's actually making it to where it's profitable to do this in America again, which is wonderful. He said, in the cost of building these facilities is not high. When I asked the CEO how much it would cost in a capex to refine rare earths coming out of Montana Pass on site, his answer was single-digit billions. Trivial amount for independence and rare earth production. So I think this is wonderful. He's also pushing his book, World on the Brink. I've not read it. I'm probably going to. I do want to put something else out there, too. So the U.S. produced 1,300 metric tons of rare earths last year, but our domestic demand was more like 6,600. So we need a 400% increase. We're doing about 20% capacity. We need a 400% increase to get it to where we're meeting all of our needs and aren't dependent whatsoever based upon today's needs. That will probably go up, though. So we do need to see this increase. We are looking at some very positive things. As Elon said, rare earths aren't rare. They're kind of everywhere. It's just a matter of refining them. We simply need to focus, I put on here, on deregulation and continue to support and push for a faster pace to get our refinement goals. By my calculations, From everything I've been looking at and reading through Grok, and I've got a post down here too talking through some of it. I think we should be able to see a 400% increase by the end of 2026, early 2027. We're already looking at ramps that get more production coming online in early 2026. That will probably be sped up. I said, imagine what this would look like if we had Tesla getting involved too. Imagine how much capacity we could increase and speed up. They're already doing it with lithium refining. I don't know that they want to do it with more things, but again, if there's a need, they should do it, and they can help lower the cost barrier and make us more independent. I think this is a wonderful thing for us to do. Yes, Saylor did buy the dip. They bought the dip. That's wonderful. 3,459 Bitcoin. So I said the message I'm trying to get out there is there's a light at the end of the tunnel, and China's latest move has only increased the incentive to move more rapidly away from China and towards other companies like MP Materials and amongst others. Jeremy Carl said China frees rare earth mineral exports to America. Montana would be happy to help solve our rare earth minerals problem. We just need the feds to get out of the way. So again, here's another facility that wants to do this, but they've got a bunch of regulatory hurdles. Also, in regard to the U.S. economy, let's see. Christopher Campbell, good to see MP getting more tread on the wire. They're a good company run by good people. Yeah, and again, this just gives them an opportunity to excel. So I would imagine that stock's probably doing well today. History Guy Scalps, are you targeting a price level for NVIDIA up 3% on tariff pivot yesterday, resistance 118, 120? I haven't looked, but we can take a look at that in a little bit. I also had a post here about the U.S. economy talking about containerized freight costs dropping back to normal levels. I said this is probably not a good sign for global trade levels, and namely China, who exports the vast majority of items, because theoretically they should have seen an increase. We should have seen an increase in container freight costs because of the influx of people trying to push forward goods to avoid tariff-related issues. So I'm saying that I actually think this can fall even more. And you see, around the pandemic highs over here, what is it? Containerized freight index point. It was over 5,000. Now it's down to 1394, and I think it can drop even more and get back to normal levels, even maybe go underneath of them as global trade, at least between the United States and China, starts to freeze to a halt. Bar chart, more than 50% of investors have been bearish on the market for 7 straight weeks, the longest streak since 1990. That ended marking the bottom of the bear market. So another indicator that tells us that we're at the bottom on top of so many already. James E. Thorne put the Fed was the big problem in the 1930s. So this is Ray Dalio. He said, I'm worried about something worse than a recession. We have something that is much more profound. We have a breaking down of the monetary order. I think that's all bullshit. He just wants to sell his book. James Thorne said the Fed was the big problem in the 1930s. Powell's Fed is fighting the last war. So yeah, it was the Fed. It was a lot of things. It was protectionism. It wasn't what Trump is trying to do, where he's trying to basically open up more trade with the world outside, excluding China, our biggest competitor in the country that's literally trying to put us between a rock and a hard place, whether it's with manufacturing and just crushing our ability to produce on key things that are going to be crucial in the future and for the golden age. But also, again, blocking rare earth minerals in order to be able to make it to where we don't have access to these things. Basically, just trying to prevent us from being able to gain any strength whatsoever, neuter us, eliminate us from the South China Sea, and make it to where the hegemony is all on their side. They run the world, but they're not going to get that. Because again, we're pitting the rest of the world against them, and we're being very successful about it. And we're going to talk about that more. But he says now Wall Street is concerned about debt levels. Again, Ray Dalio is. Where were they when Biden and Yellen and Brainerd spent like drunken sailors? Again, you didn't see these same concerns from people like Ray Dalio, Jamie Dimon, and a bunch of others. But you do see them now, and Janet Yellen and all these people. You do see all this concern where it didn't exist. And I think if we had a Kamala Harris regime right now, we also wouldn't be seeing them. Not because there weren't problems there, but because they don't care if the right people are in power, which is not Trump. And again, the debt levels in China are infinitely worse when you look at debt to GDP in the proper way. It's getting closer to 350%, currently sitting at 330. I think 350, including shadow banking. So I just think this is kind of a joke. again. Goldman Sachs posts a double beat for Q1, recession canceled. You know what's funny is they're the ones that are telling you gold can get to 4,500 and that the world is falling apart, but they just had a double beat. You got to love it. Load the Tile says Jeff Walton. Again, Kashkari last week said the Fed has tools to provide more liquidity. Fed Goolsbee, 12 to 18 months from now, rates will be lower than they are today. That's interesting. That completely defies the point of what we've heard of all these inflation expectations within, the Michigan survey. And now today we're going to get the New York one. Everybody was worried, right? Everybody was worried. Shorting gold here, that might be a little risky, but you know what? Honestly, I do think we're getting close to the top. So yeah, we do have a bunch of Fed speak today too, guys. Let's just look over here. So we've got Barkin, Waller, Harker, and Bostic all talking today. We've got Canada showing their new motor vehicle sales at 7:30, wholesales at 7:30. We've got some bill auction issuance for France. I don't really care too much. I'm just putting them on my list to keep an eye on it. It's the consumer inflation expectations. I'm sure these are going to be retarded. These are out of New York. So we don't have a really big day today in the United States. We don't have a huge day. And then tomorrow, it looks like, import-export prices. That should be interesting. New York Empire State Manufacturing Index, Red Book. That's probably about it. So, and then Wednesday, I think we get, let's see here. What do we get on Wednesday? Wednesday, we get a lot of stuff, but we also get net long-term tick flows. This will let us know if foreign countries are doing a lot of selling of our bonds, or if it was something like hedge fund blowing up around the world. And foreign bond investment, these data points over overall net capital flows, these are going to be very telling about whether or not people are running from America, or whether or not they're still investing in America, or whether or not it's just flat. So that will all be good stuff. Also today, fear and greed sitting at 18, extreme fear zone. So even though you might have made a lot of money in this last week, I made almost $1 million, probably like 750,000. It's not that bad. We're still sitting at the fear and greed of 18, which is a pretty low level, and so we've got some runway. MP Materials, again, this is this great company in California. I'm actually going to start following them. They said Elon spot on, rare earths are everywhere, but the ability to refine them is at scale is rare. Ore grade matters, but it's expertise and infrastructure that count. Taking it all the way to magnets, rarer still. Now is the moment for the U.S. to lead. We've got Zero Hedge here saying 5-year inflation expectations, market versus Democrats. So the market-based shows it going down. The Democrats show it going to the moon. Which one are you going to believe? Report. So over 3,000 Chinese sellers are quitting Amazon over the tariffs. That's a fantastic news. It means quality of products. So again, it just means that these guys are getting crushed. That's about all we have for the U.S. economy side. I do want to jump over to China because there's a lot to talk about there. This is a good post from Rod Martin I wanted to talk about. It says what you're hearing. Well, here's what you're not hearing. I mean, you're hearing it from me, but let's listen to somebody else say it too, because evidently people need that. They need other touch points where people tell them the same fucking thing I did so that they can believe it. The Chinese cannot replace the U.S. market without it. The Chinese economy collapses. So we'll read more about that. Let me get caught up on chat real quick, though, before we go too far. Sailor will never sell. Let me check out a little busier here. Mike says BTC $90 possible this, or 90,000 possible this week. Yes, very. History Guy Scalps. Did you talk about the articles stating strategy may need to sell? That's fucking stupid. I didn't even look at it. Sailor will never sell. Yes, exactly. Christopher Campbell. Good to see MP. Yep. Okay, that was you. Sailor bought the dip. Yes, he did. Yeah, he's buying the dip. That's how much he needs to sell. LW Crypto, several rare earth miners in Europe, also Finland, etc. Yeah, there just needs to be a lot more, and I think the U.S. is going to move a lot quicker than they are. History Guy Scalps, are you targeting a price level for NVIDIA? Again, we can look at that later. Megatron, GM Gang, Sea-Dog, Morning, Jesse, what's up, dude? Danny, Goldman Sachs posted double beat. Yep. I'm shorting gold here. Let's see. Who in chat is shorting the VIX? Going to be a good day for that play. I think so. It's already down to 33. So again, it was up to 60. It's coming down pretty hard. Alex Garcia, Ray Dalio buy 60 million plus Tesla stock a couple of months ago. Yeah, maybe. Maybe he's starting to get smarter. Alex Garcia, I believe he did. History Guy Scalps. Jesse, do you have an amazing job of reviewing the news? Thank you. Tyler, do you follow Believe in M2 Money Supply? I do. There's a bunch of different ways to look at it. I was actually looking at my boy Michael Howell, who wrote the Capital Wars book. This is kind of like his jam right now, right? Where he's talking about what's going on. He has way too much optimism in China than compared to what I do. But the thing we both agree on is global liquidity is rising. And let me just read from here. So even though America may win the trade war with China, so again, he's bearish. He thinks that China is going to use the bond market as a weapon. I think that would be incredibly stupid for them to do, and I disagree. But again, he wrote a book about capital wars and has 96 metrics to track global liquidity. So we'll give him the win for now. But even though I do think he's going to end up being wrong. But he said the two economies are so intertwined that a deal has to come. I do agree with that. I think I think a deal has to come. We are way too intertwined. If we continue to separate like we're doing, expect Bitcoin to go to the moon because money printing is going to be through the roof all across the world. He said, but I think America still wins, hands down. But until then, the threat of further yield curve control and debt monetization is real. So he's talking about out of China. Put another way, even if the U.S. Fed stubbornly refuses to expand its balance sheet, let's not rule out an indirect liquidity boost orchestrated here by a hard-pressed U.S. Treasury. So he's saying even if the Fed doesn't try and do it, we'll see the Treasury do something. He said we remain unequivocal about the path of global liquidity through the rest of this year, largely because of the uncertain Fed. But a Treasury-led monetization could add to what has recently been a stuttering, but at least a supportive global liquidity backdrop. So I think the rest of the world is going to provide a ton of liquidity. I do agree with him that the Treasury has the ability to provide a ton of liquidity. And I do think that the Fed will be pushed to provide a lot of liquidity. He said rising global liquidity brings us to gold and Bitcoin. Brings us on to gold and Bitcoin. We like both, but lately gold has been favored largely because of the pie chart below. This shows how three factors affect Bitcoin rank global liquidity: the gold bullion price and investors' risk appetite. However, gold operates through what mathematically is known as an error feedback process, so it can be negative in the short term. In other words, when gold is spiking higher, Bitcoin is weak and vice versa. So I think, based on technicals, that gold is topping right now, and therefore Bitcoin will have its turn from a technical level, both on gold and on Bitcoin. That appears to be the play. And global liquidity is still expanding, and I don't see that slowing down. He said, but in the long term, both reinforce each other. I agree with that. We argued earlier that gold may be rising strongly because of a recent hefty Chinese buying. I agree with that too. On top, the other recent negative on the Bitcoin price is investors' risk appetite. The sharp market sell-off in the wake of the trade bomb took BTC down with it. Yes, it did. But I would actually argue it's been really resilient and kind of leading. Gold is far less influenced by risk appetite, so it can more easily ride through these risk-off phases. Sure, that's true. Historically, that is very much the case. Thousands of years, people have been using gold, so it's got that history. Can U.S. investor positioning become still more risk-off? Latest data shows that since 1978, only 8.8% of periods record a greater risk-off positioning. So he's saying it's not as likely, and we've looked at tons of other stuff that tells us it's not as likely. Admittedly, early last week, this was 3.5%, but markets since bounced. Odds are positioning should consolidate around here. See the following chart. I agree. Let's see. Somebody said, Hassett, we're making enormous progress on tariff talks with the EU. Fox, beautiful. That doesn't surprise me. What option calculator do I use? If you look over here, it's optionprofitcalculator.com. All right. What does this tell us about Bitcoin after gold's stellar run? It could make sense for BTC now to catch up. On top, investors' risk appetite is already low, and by the law of averages, unlikely to fall much lower. I agree. And a global liquidity has lately picked up thanks to the weaker U.S. dollar. And again, the U.S. dollar is continuing to weaken. We love that for so many reasons. China's liquidity injections and the temporary rundown in the TGA, Treasury General Account, in the U.S., thanks to the debt ceiling. What's not to like? We talked about that. We talked about the TGA running down, but we didn't put a lot of focus on it. But again, that's helping liquidity in the United States too. He said the regular BTC and global liquidity chart is shown below. This 6-week change is designed to eliminate noise. The 13-week lag is the average response of BTC. Further down is an update of the rolling sensitivity of BTC's change in global liquidity. The relationship looks robust. So again, I won't show you this all the time. I pay $75 a month for this. You guys should check out the Capital Wars Substack if you want to be a part of it. But he does give out really good data. And again, on orange here, you can see Bitcoin. In black, you can see the GLI, the Global Liquidity Index. He's advancing that 13 weeks. That's usually the time frame, roughly, by his calculations, that you start to see the BTC move. And so it's showing that, again, we should get a nice bounce in Bitcoin and orange coming afterwards very quickly here. And that is starting right now. And that lines up with everything we're seeing from technicals. He also said sensitivity of BTC to global liquidity. He's saying that it's more sensitive right now with the rolling 60-week regression loading beta. So he's saying we're going to get a spike. We should see a spike with liquidity based on its sensitivity to liquidity and the increased liquidity and the technicals showing that gold is topping while showing that Bitcoin is ready to blow up. All good stuff, guys. All good stuff. So, but let's get back over here to the tariff conversation. Man Mahindra said EU manufacturers are not eating the tariffs because Chinese tariffs made EU goods even cheaper than Chinese ones in certain cases, even after the price hike. Let me read that again. EU manufacturers are not eating the tariffs because Chinese tariffs made EU goods even cheaper than Chinese ones in certain cases, even after a price hike. Interesting. All right, so I'm going to continue over here. With a VIX high, GDX should stay bullish until that changes opinion. I don't have much of one. History Guy Scalps, whoever suggested VIX, that looks like a solid for at least a double. Yeah, the VIX, we talked about that last week. I don't remember who brought it up, but they were asking, hey, when it was in the 50s, I think it just come off 60, would that be a good thing to short? Yeah, it probably is. I mean, it'll probably be going down to the 20s, I think, this week. There's definitely a play for this to boost. MB is replying to my comment. Okay, awesome. Oh, sorry, your comment's higher. I'm not going to go back that far in the comments list, but okay, good to know. Thank you, sir. All right, so let's get back to this. Back to trade and tariffs in China. Rod Martin said, here's the shocking truth. China's entire economic miracle was built on one thing, being America's cheapest manufacturing hub. America's, and then they tried to broaden out to the world, but we buy 1/3 of the consumer goods. But they forgot something crucial. The Chinese miracle playbook was simple. Open markets to the West. Offer dirt cheap labor. Again, slave labor. In a lot of cases, guys, automation does not exist. A lot of it is still just fucking human beings working for cheap. And there's other countries that can do that better. It looks like Yardeni research is coming out at 8:30 in about 6 minutes. We can listen to him. I really don't like Ed Yardeni too much lately, but we'll listen to it probably. Ignore safety standards, let Western companies rake in the profits, and again, just dumping too, in order to be able to prevent us from being able to have any kind of manufacturing at all, including Europe, including the world, right? This worked for decades, but China forgot something crucial. Others can do this too. He put massive miscalculation. Beijing thought that American leaders that they made rich would protect them forever. They believed these corporate puppets would never let the U.S. stand up to China. Wrong. Along came Trump, who owes them nothing. And again, they've been brutalizing us. They shit talk us. They destroy our markets. They dump on them. They subsidize them. They do everything they can to fuck us. And that's over. Ridiculous. The numbers don't lie. U.S. exports to China, $143 billion. China imports to the U.S., $438. I actually believe that number is $500 to $600 billion. It's obfuscated by the fact that they dump into Vietnam, they dump into Mexico, they dump into all these other countries. They basically just relabel stuff. We'll look probably at a video here in a little bit where in Vietnam they'll just bring the ships into port. They'll change all the labels to made in Vietnam. They'll ship that shit off to the United States in some cases without actually doing anything. That's some of the stuff that Trump's trying to fix right now. So I think the numbers are even worse for them. Rod Martin, meanwhile, countries like India, Vietnam, Bangladesh are celebrating. They're ready to take China's place and open their markets to the U.S. So in some cases, they have some dependencies against China. So it's a tightrope that they're walking. But at the same time, they know the advantage comes with the United States. So they might talk fine with China to make it look like diplomatically they're playing ball. But in the end, they want this business. They all want this business. And that's why they're playing so nice with us. That's why Vietnam was trying to talk to us first before they talked to China. Here's what the Inamedia won't tell you. Inamedia, interesting. China exporters are panicking, abandoning shipments mid-voyage, factory orders frozen, container volume down 90%, and this is just the beginning. China can't replace the U.S. market that made it rich. 100% agree. We're going to look at some videos. Reports flooding in, factories shutting down, stores, warehouses overflowing, the house of cards is falling apart. Yes, there's a bunch of that. This is from China Observer. We're going to watch a video about that a little bit later. He said America buys 3x more than Japan, China's next biggest customer. 3 times more than their next biggest customer. Without us, they're finished. They're already on the ropes. Their economy was already on the ropes. They cannot lose business with us. It was too profitable. This is where they made the bulk of their money. And he said, will this affect U.S. consumers? Sure, briefly. You might struggle to find cheap plastic junk for a few months, but other countries will step in and trillions in new investments are flowing into America while countless of factories. I've said this for fucking years, and I'm just going to bring it up right now because I want you guys to understand this. China's failure will benefit everyone around them, including the United States. Has anybody in chat been around for long enough? Have you been around before my X days, back when I was in Facebook groups, people that know me more locally, or even when I started on X? And I've been saying that China's demise can lead to the golden age for the rest of the fucking world. And that is what's going to happen. The junk coming out of China, these other countries are going to prosper now because now it's more economical to produce there. And so they can see increased flows. They'll see more manufacturers from China literally leaving that region and coming to other parts of the world in order to be able to avoid the tariffs now since the war is directly against China. And they will benefit. So it's not a fucking depression when we're seeing growth in the United States. We're seeing TSMC and all these other companies coming into the United States doing business. We're seeing all these positive pro-growth policies in the United States. We're seeing that the United States can do well, and at the same time, everybody that's getting ready to partner with us in this new trade regime will benefit. This is the new world order. I'm sorry if the Europeans in China thought it was going to be them and their vision of this dystopian bullshit future. It's gone. We broke it. Trump broke it. And all the idiots that think that this man is an idiot are incredibly foolish. He said, but other countries will step in and trillions in new investment are likely to flow into America while countless factories leave China. Investments in the U.S. under the Trump admin, $14.1 billion bid from Nippon Steel, $20 billion from Hussein Sajwani, $500 billion over 4 years from Apple, $500 billion over 4 years from Stargate, $600 billion from... This is nothing compared to the actual stats that we're seeing right now. This is old. The bottom line, China picked a fight they can't win. While America adjusts, the CCP will face consequences for their refusal to truly open their markets or to abandon aggression against their neighbors. Game over. The decoupling is underway. I 100% agree. I didn't know that he's actually talking on Fox Business. That's great. Good for you, Rod. Again, we got to talk about more of this, guys. James E. Thorne, for the record, Wall Street Group think on China ignore simple facts. So again, all the Wall Street guys, all the CNBC lately is just nothing but negative right now about the United States and about Trump. And it's bullshit. 43% of China's external debt is in USD. 52% currencies, 83% of it in US. So isn't it just a stat? It isn't just a stat. It's a double-edged sword. Anyone spinning it otherwise is peddling fiction. It's a strength, sure, hooking China into the dollar's global veins, scoring liquidity and investor nods. But don't kid yourself. It's a glaring weakness, too. Every USD hiccup or Fed power play leaves Beijing exposed. Sweating bullets at Uncle Sam's mercy. Scott Bessent's got it nailed. China's holding a pair of twos in this global poker game. Bluffing hard, but fooling no one who's paying attention. The RMB's dirty peg to the USD, micromanaged by the people, the People's Bank of China, or the PBOC, as a lot of times you'll hear, is a chokehold, not a crown. It's keeping things calm, but forces China to kneel to U.S. monetary moves. And the capital account bolted shut with Beijing's iron fist on Forex and investments strangling the RMB's big shot ambitions. Again, you can't have the level of control they have over their currency and have any ambition on the world stage. It does not work that way. He said, yet Wall Street's getting suckered, buying the hype that China's ready to flip the table on the United States world order. Pure hogwash, free-floating RMB, that's an invitation to chaos Beijing cannot stomach. They are authoritarian dictatorship that is communistic. They are not going to allow this to happen. China saw what happened to Japan after the Plaza Accord. An open capital account, cue the capital flight. History's got receipts. So we either get the Mar-a-Lago Accord, and again, they're kind of fucked. All their domination, all their beliefs of world domination, taking Taiwan, taking the Philippines, taking South Korea, all these things go out the window with the Mar-a-Lago Accord. We're gonna sound really soft-handed. We're gonna sound like we care so much, and it looks like Ed Yardeni is going to be talking here on CNBC. So we'll jump to him in a second. But here's the thing: if they do a Plaza or a Mar-a-Lago Accord, Plaza Accord type thing, we benefit hugely. If they don't do that, we benefit hugely. We win in all scenarios. Even war, I think we fucking win. So just understand this. He said, can we stop the charade already? That 43% USD debt locks China into the dollar's empire strength and shackle in one brutal bind. Bessent's right. China's got a weak hand, but Wall Street's too busy being bluffed to notice. Ditching USD-denominated markets, a fear dream until the RMB breaks free and the capital gates get torn down. Spoiler, that's nowhere near happening. China is in fucking collapse. This is eerily similar to the British pound in 1992, where the pound was being manipulated dramatically. Bessent understands implications. Yeah, and he broke the Bank of fucking England. Thank you, George, for that segue. We're going to watch this video in a second, but I want to listen to Yardeni talk in a minute. We'll talk about gold being China's Achilles heel, and we'll look at a video from my favorite Falun Gong channel, China Observer. These guys are so much more intelligent than any 99.99% of the shit I'm seeing on X right now. They've been brilliant throughout the years talking about how China was going to reopen or they were going to collapse, and then they did. They talked about COVID months before anybody in the States was even talking about it. I was there. I watched them talk about it. I knew it was a big deal when other people thought I was a fucking lunatic because of these guys. And I've been listening to them show how China's economy has been weakening for the last several years and how now it's on the edge of collapse. They're a great channel. People ignore it because for some reason they don't want to understand the truth on China. I will not ignore it. I will tell you the truth on China, and you will see it soon enough. Here is Ed Yardeni. Let's see what this guy has to say. He's probably going to be one of these Wall Street types telling you that the sky is falling for the United States, we're creating chaos, and that China will prevail. I could be wrong. Let's see if I'm surprised or shocked.
I don't know if you caught it, but I did ask Secretary Yellen about the T-bill issuance.
Yes, I did.
And
she loves T-bills.
If only I had done T-bill and chill myself, like Warren Buffett. So she demurred the idea that she did, or that we should increase issuance on the short end. But in a nutshell, are you still worried about the action here with 444 or so on the 10-year?
Well, I think some of the volatility is obviously of a concern. The level doesn't particularly bother me. 4.5% is kind of where the bond yield should be. It's normalized. We've been looking for 4.5% plus minus 25 basis points for this year. And it's been down a little bit below that, but now it's back exactly where we think it should be.
It's weird because there's so many problems to talk about, but at the same time, I always think of you as someone who comes in and says, calm down, and markets go up in the long run. And like Joe said, we were at what, 3,600? What's this, 30?
When Democrats are around, he says that.
3,600.
We were worried. Mike Wilson's worst case scenario was 3,000. This couple
of years ago, 2-3 years ago.
Yeah.
And here we are now. So all of the following, I just want to preface with that. That said, you've written about, what's going on with the fiscal deficits and just how bad they are.
Sure.
And if we can't
another
solve
Ray
that, we're not
Dalio.
going to solve anything on the trade
see.
rate. And your note this morning on Taiwan, I mean, just saying that, look, if the president's using his bullets now, which he's threatened to use if they were to take, we're already in the middle of.
Real quickly, Marquis said, Jesse, just wondering if you were the leader of China, what would you do to regain world dominance from the U.S.? I would, if I was Xi Jinping, I would kill myself or relinquish power, which is a death sentence. And I would disband the CCP, and I would open up as a democracy, because I think China, by the numbers, everything is good, and the only way that you're going to encourage foreign investment into the country is to pull a Harry Carey and impale yourself and eliminate the CCP to where people can truly be free and all the cameras go away. And the West goes, oh my God, China's like a good place to be again. We can trust them now. They really are opening up. But the likelihood of that happening without a major revolt where people rape, pillage, and murder millions of people in the CCP, I think is super low. And I don't see Xi Jinping giving up whatsoever. So again, I think that their demise has to come over time and through pain and suffering. But I see no way of saving them without eliminating the CCP. It is the government and the corruption in the government and the control of the government that is suppressing them right now. They did best when Western dollars were flowing in and they were opening up to democracy, and that's the people thought that was the route they were taking. It's when Xi Jinping started to let the world know that the South China Sea will be militarized and that he's going for his third term and he's officially a dictator. That's when the demise of China really started, and it's just been ramping ever since. So they've got to turn away from that. And what is the likelihood that will happen? I'd say they won't, not without revolt. And it's hard to do in China because they rule with an iron fist.
The trade war, and
so it's pretty much just failure. I don't see other options otherwise.
Now we're backing down from it. If you're the Chinese, are you going, yeah, what are they going to do? Anyway, so those are all the
Let
the
Ed
worry
talk.
spots.
I want to hear what he
Yeah,
has to
there's
say.
plenty of things to worry about, but the market is actually holding up pretty well. I mean, we're still basically in correction territory. We got very close to bear market for the S&P 500. The NASDAQ got into a bear market for, a few days, and now we're back in correction territory. I think we probably made the low in this sell-off on April 8th, right before the April 9th.
I 100% agree. I'm
Shot to the
shocked.
upside. I think it's hard to really short the market from here when you never know what the president's going to back off on next, what he's.
Well, and so that's a weapon. I just want to say that's a weapon, and I don't think people realize this, but Trump can literally, you can take a negative narrative and he can reshape that the same day and just destroy shorts. Think about that. So if you're trying to short the market right now and you're a bear, you're just going to get fucked. You're just going to get fucked, not only from the technical standpoint or from, again, unemployment is ridiculously low. New claims are ridiculously low. That holds till at least September, guys, because the government data doesn't really pick up until that time because these people have like a severance package and they're going back to the private markets. And so if anything, you're going to see productivity increase and you're going to see unemployment stay low because they're competing against or they're jumping into that sector, at least, again, until September, where we could see some kind of like bump up in unemployment. But we'll have a lot more data by that time, right? Like we've got 5 months to kind of figure out whether the world is getting better or it's getting worse. And I think you're going to see a ton of really positive headlines with companies coming into the United States. Somebody mentioned that, oh, hey, maybe we'll see some kind of incentive where Trump will remove the 10% tariffs. Or they'll allow companies that invest in the United States to avoid those same tariffs. Just think about that. Doesn't that make sense? If you're in a country that's got a higher tariff rate and they say something along the lines of, hey, if you invest certain said dollars into the United States, you'll be exempt from these tariff rates. This does not apply to China, but it applies to other parts of the world. They can just slowly tighten the vice against China while loosening it against the rest of the world and getting better trade deals. So again, this is all very, very positive in my opinion. There's just so much that they can do to destroy shorts. If you're short this market, I think you're just going to suffer greatly. Again, 17 years of data in the S&P shows that there's 7 other times where we've seen a weekly bounce as strong as today, or strong as this last week. This is the 8th, and every time of them led to a new all-time high in short order. So I think this is very positive. Gemini Knight said the CleanSpark options seem attractive. 900% return on 127% move of the underlying stock. Risk to reward seems pretty good. I would agree. It does seem pretty good. I've got some pretty heavy bets on that. Let's listen to the rest of what Ed has to say.
He's going to pivot on next. And the market has shown a willingness to go up on just minor promises of a 90-day postponement. So I think that's helpful. And look,
he's actually 100% right so
I
far.
think the data still show that the consumer is spending. You know, Americans are great. When we're happy, we spend money. When we're depressed, sometimes we spend more. As long as there's a wherewithal, and the initial claims data show that the labor market's hanging in there remarkably well. You don't see employers just saying, you know, you're fired because of these tariffs.
Yeah, but so it looks like what happened was and is a sentiment shock, and maybe a political shock that you think Washington is responding to, because otherwise they could look at the hard data like you're talking about and say full steam ahead.
Yeah, I mean, the soft data is soft for sure. The consumer sentiment is extremely weak. I'm not a big fan of the consumer sentiment survey. It's
I can't believe how much I agree with this guy. Do I just have him wrong? Do I have this guy wrong?
it's very twitchy. It's right now that it's mostly being driven by inflation expectations. In the past, those inflation expectations were driven by the price of gasoline, and here they just soared to like 6%. And you know, you go buy a
gas is lower.
Fill up, gas is actually lower. I think people are missing the fact that we actually are getting some stimulus here from lower energy prices.
Holy shit! I agree with him on everything.
All in all, I think the consumer is going to continue to spend. I don't think we're going to see a big increase.
They just won't spend on certain crap, right? They're not going to be buying Chinese goods that cost them a huge amount of money right now, but they might be buying those goods from other places if they're in fact cheaper now. It's going to be fascinating. And again, if they slow down on goods, guys, what are they doing next? If you're not going to buy a bunch of crap, what are you going to do? You're going to go out to eat with your family. It's summertime. You're going to travel. You're going to do other things. I could see the services sector really benefiting from what's happening right now. What do you guys think in chat? I see services benefiting from these high tariff rates on goods. People slow down on the crap. They go back to the service sector, especially for the summer. Why wouldn't you?
And unemployment, maybe we're going to slow down on hiring because of tariff uncertainty. But I think businesses are.
Real quickly, somebody asked about Palantir and if we're missing the lows on that. We totally could. Palantir had great news over the weekend. I forget what it was all about. I think it was about helping. It was the theories that we had before about them helping with government efficiency. So again, I could just see that getting better. Yeah, maybe tourism starts to come back. There's a negative narrative about America right now, but I could see that getting more positive. If nothing else, I think just internal travel will be through the roof.
Going to hoard labor because labor is still in short supply, especially skilled labor. And I think productivity has been making a big comeback. I think it's stalling out here, but I think it will continue to make a comeback over the rest of the decade.
So do we need to worry about the fiscal situation?
I 100% agree about the productivity numbers. They might show us stalling out right now, but I think they're going to get a lot better because, again, you're going to have more people going into the private workforce. And you're going to see pay starting to increase for that. You're going to see people that have been on unemployment forever, their entire lives in West Virginia, all of a sudden getting fucking jobs now because they can get paid, and they'll have incentive to get paid because it'll be a lot better than what they're receiving. You're going to see hope returning to the Midwest and the Rust Belt. It's going to be fucking awesome. And again, just getting people out of the government role, making them work for a living.
Well, I've been doing this for over 45 years, and I got a bunch of books on my bookshelf back from the 80s and 90s about living beyond our means and the debt bomb and all these. And meanwhile, we're, as you said, look where we are compared to all the doom and gloom that was out there. My attitude is I'll worry about the deficit when the bond market worries about it. And I guess arguably you could say that was certainly a concern last week. But again, look at the level. And the other thing is Janet Yellen, you asked Janet Yellen about the bills. She was very clever on November 1st. She said, hey, to the bond vigilante, she said, you don't like my bonds and notes? Take my bills. And the thing about it is, if the Treasury issues more bills and reduces the supply of bonds and notes, I don't think that the deficit is a problem financing it. at all. And as a matter of fact, it forces the Fed to buy those treasuries. So instead of the bond vigilantes being the control on inflation, it's all going to be all up to the Fed if they do more and more treasury bills. And I think that's probably where Bessent's going to go next.
Yeah, we'll see.
Yeah, Bessent never ruled that out. And with the yields climbing, I mean, they're getting better today. Again, he still has the supplemental leverage ratio he can play with. There's things that he can do to bring it down, but he could also just continue to do what Janet Yellen is doing until we can get the bonds at a more reasonable level. I agree.
See if he does or not.
I think I misjudged this guy. And I've been doing a query against him to try and figure out his political affiliation and everything else. Says with political affiliation can be complex and personal and official. I did a deep search on this. Says voter registration is not publicly available. The evidence leans towards Yardeni being a Republican based on financial support of the party. This conclusion is drawn without controversy as it relies on public records that do not involve sensitive personal information and disclosures. So if anything, he might be on the other side of the fence. I've always thought he was left leaning, but I guess I should just look at him at maybe being more to the right. And he's really well aligned with what my view of the world is. So if anything, I got to spend more time figuring out how much I like Yardeni research, because this was really impressive.
But because it all fits together is why it's just interesting. And this is also what Yellen said. She said the only way you can solve a trade deficit is by cutting government spending effectively, kind of fixing the fiscal deficit. So all of these things are.
Yeah, well, this is kind of learning by doing for this administration. I mean, nobody's ever taken this kind of sledgehammer to trade since the Smoot-Hawley tariff.
Yeah.
And everybody knows that. Everybody knows how horrible that can be.
Yeah.
And I think there's going to be a lot of pressure to back off on it.
Well, Ed, we appreciate you.
So I just want to reiterate. I feel like this is the part where I'm going to disagree with him. By the way, Bitcoin's at 85,200. It looks like if you guys own MSTX and the stuff, I made $400,000 on Friday last week. Earlier in the week, I think it was a Tuesday, I made $500,000. Then I lost a couple, like 300,000 because the market dumped. But again, I think $750,000 in gains last week. Those numbers could be much higher today. I don't have a lot of leverage on Tesla. It's only up 2.25% right now. But I do have a bunch in SMCI, Leaps that I bought, which is up over 6% today. I've got the Sol Strategies. Sol Strategies has just been screaming like crazy. It looks like that investment, the CYFRF, is up 9.4% today. Iron is up 4% in pre-market. CleanSpark's up 4.4. Mara's up 4.6. And MicroStrategy's up 4.4 too. So I'm looking at double-digit gains again today in my options contracts. It looks like ARKG is up another 2% after going up almost 9% last week. So today could be another big day. I should be well into the 3 millions again in my portfolio, which I like. And again, that's off of the fact that we're looking at a fear and greed of 18 today, which is wonderful. Real quickly, I want to jump over here. I wanted to show you guys. So let's just see here. I wanted to go back here. I wanted to look at what Japan's data was. So Japan, that was Sunday. Never mind. We already looked at that. And again, I did want to speak to this, though. I didn't speak to the Japanese data earlier. So industrial production, if you looked over here, the year over year was 0.1. They expected it to be 0.3, but the month over month number was 2.3, a little bit lower than consensus and forecast. So they're just a little bit behind with both numbers. We did get Canada, new motor vehicle sales, 125,400 out of 119,000 forecasts. So you can see that we probably had a boost in February from them people trying to get past tariffs. Wholesales in February, 0.3%, a little bit lower than consensus forecast. Again, nothing really. We got the consumer inflation expectations. I don't even give a shit about that. I'm going to jump back over here. We've got about 40 minutes until the market opens. I'm going to use this opportunity to hit the restroom. I'm also going to, and I did bring the guns out today, guys. I did bring them out. Somebody requested that, so I did that just in case we could get the market to go up today. But I'm going to run to the restroom. I do want to play this, though. I want to play this video in regard to Vietnam. In case you guys didn't see it, you have to see these videos. This is only a couple of minutes. Give me 1 second here. I'm going to move this to 1.25 just to make it a little bit quicker. It's just like 15 minutes. Or it'll be, I'll do 1.5. And I'll turn the volume down just a little bit because it's a little high. But you guys got to hear this. You guys got to hear this. So this will be like 10 minutes right here, roughly, or 12 minutes. But you got to hear it. It's really good stuff. Give me 1 second and I'll be right back, okay?
Vietnam's new factories are being built and invested in again. Did you all see that? This whole area is filled with newly opened factories. I'm currently in the industrial park in Xin Ning, Vietnam, and it's everywhere. Look, the factory over there. Do you see it? New Wide Group, a Taiwanese company. It's a huge area, almost all taken up by their factories. Right now, I'm seeing this in Xin Ning, Vietnam. The power of Chinese companies here is very strong. More and more Chinese factories are moving to Vietnam. You can see here, this is another Chinese company, and all the factory orders here are completely full. Look at all the motorcycles parked inside. They're all workers coming to work. A single company has hundreds of employees, and the whole factory is very powerful. Everywhere you look, there are workers. This is the Phu Dong Industrial Park in Vietnam, the textile and garment area. Over here, they're about to build these one-story factory buildings. See that? They're almost ready to be built. More and more foreign investment, more factories are coming to Vietnam to open factories. Because of the US-China trade war, many European and American orders had to be moved here. You see, their factories are almost finished, almost ready. On both sides, there are factory buildings. Everywhere you look, there are workers, lots of workers.
On April 11th, Chinese blogger Ling Shen recorded the above scenes at Phu Dong Industrial Park in Xin Ning Province, Vietnam. According to available data, the total area of Phu Dong Industrial Park is 3,285 hectares. The park's industries are primarily focused on textiles and garment manufacturing, which account for 43%, followed by rubber and plastic products at 28%. The park hosts numerous enterprises from Taiwan, mainland China, and South Korea. Taiwan-based Xurong Group, a top global garment manufacturer, mainly provides contract manufacturing services for international brands such as Nike, Adidas, Uniqlo, and Lululemon. Ling Shen also mentioned that on April 9th, the United States temporarily postponed imposing a 46% tariff on Vietnam for 90 days. This decision brought relief to Vietnam and encouraged many Chinese and Taiwanese manufacturers who had been waiting on the sidelines after the announcement of the U.S. global tariff policy to increase their investments in Vietnam. Ling Shen recently visited Binh Duong and Xin Ning and observed that Chinese factories are widespread in the region. However, the U.S. tariff delay is temporary, not permanent. Vietnam has recently reached a preliminary trade agreement with the U.S., with Vietnam promising to strictly control the re-export of Chinese goods. This move could have a significant impact on Chinese manufacturers. Ling Shen noted that if Vietnam strictly limits re-export trade, some Chinese exporters may turn to countries like Malaysia or Indonesia. Nonetheless, thanks to continued investments from companies like Samsung, Apple, and Nike, Vietnam's foreign trade position remains strong. Ling Shen remains optimistic about Vietnam, seeing it as the next Guangdong. After the first US-China trade war from 2018 to 2020, Vietnam became a key country for the relocation of Chinese industrial chains, playing multiple roles. To avoid high US tariffs of up to 25%, many Chinese and Taiwanese companies moved their factories, including those in electronics, textiles, and footwear, to Vietnam, benefiting from its low labor costs and favorable policies. According to Chinese businessmen in Vietnam, Chinese enterprises in Vietnam can be categorized into three types. First, small factories processing local resources such as rubber and cashews for export of chemical raw materials. Second, companies that do not directly produce but set up businesses in sectors like small appliances, machine tools, or hotels and restaurants to cater to the growing Chinese tourist demand. Third, companies that relocate to avoid U.S. tariffs and take advantage of Vietnam's low labor costs to engage in assembling and re-export trade. The third category, heavily reliant on U.S. export, has been hit hardest by the trade war. Among these third category companies are many involved in country of origin washing, where Chinese products are shipped to Vietnam, undergo minimal processing, or are simply labeled made in Vietnam, and are then exported to the U.S. to evade high tariffs. Media reports have exposed that some Chinese ships only briefly dock.
So all that's going to end. All that's going to end. This is going to be part of what you see coming out of the United States agreements with countries like Vietnam. It'll be the, hey, if you don't want to get tariffed to shit in back, you need to make sure that there's controls in place that are ensuring that these companies cannot avoid these tariffs. And this will be a double-edged sword for Vietnam. They'll probably let some through, and then they'll hurt others. JNAP, thank you for becoming a member. And so the incentive will be to work with America on getting rid of the Chinese companies that are doing this dumping, or force them to literally produce in the country. It's an incentive that benefits Vietnam a lot as well, and so you'll see a lot of that. But we'll have some measures to try and ensure that they're doing more of this in the future in order to prevent this from happening. And again, we don't need to squeeze the noose overnight. We just need to squeeze it more and more and more and more and more over a longer period of time.
At Vietnamese ports receiving Made in Vietnam certification before shipping directly to the U.S. U.S. trade advisor Peter Navarro has criticized this practice, accusing China of using Vietnam as a transshipment point to evade tariffs.
Yeah, and he's right about that. He's not the smartest guy, but he is right about that.
As an important member of ASEAN, Vietnam has long played a delicate balancer role between China and the U.S. This aligns with the bamboo diplomacy praised by former Vietnamese Communist Party General Secretary Nguyen Phuc Trong, meaning make many friends, offend no one, continuously seeking balance between major powers to maximize benefits. On the one hand, Vietnam has deep political and economic ties with China. In 2024, bilateral trade reached USD $205.2 billion.
All right, real quickly. Anthony Yeo said, MSTY is all over my X timeline. 5% monthly yield estimate of it after taxes. It's pretty juicy. What's your take on allocating a small portion of your portfolio? I like that better at the end of the bull market. I might actually pull that up in a little bit here. And I don't know if I like that better. Maybe it'll be a strike or a strife that I'll like better. I do believe that both of those turn into income, though, whereas MSTY is reinvestment. And not income. It doesn't like dump, give you money out of your account once you get the payouts. So they do serve different purposes. I think Jeff Walton kind of talked through some of that too. We can look at that a little bit later. But I actually like MSTY at maybe the end of the bull. That might be a position where their dividend, if they can still pay out their dividend, because they do this based upon again, the fluctuation in Bitcoin and MicroStrategy it helps them generate their yield. I just don't know. I don't know. I wouldn't put everything into it. I just don't know what products might blow up in the bear. So it's one of those things where, again, we'll have to learn more and take your time with it. Don't over allocate to any of these things.
Billion, with Vietnam exporting USD 61.2 billion to China and importing a USD of 144 billion, resulting in a significant trade deficit. China is Vietnam's largest source of imports, and its manufacturing supply chain is heavily dependent on Chinese components and raw materials. On the other hand, Vietnam's reliance on the US market is even more critical, with exports to the US totaling USD 142 billion in 2024, accounting for nearly 30% of its GDP. The US is Vietnam's largest export market, with products like Nike shoes and consumer electronics forming the backbone of Vietnam's exports. However, the reciprocal tariffs policy introduced by President Trump disrupted Vietnam's balancing act. On April 2nd, Trump announced high tariffs on global trade partners, with Vietnam facing a 46% tariff, second only to Cambodia at 49% and Laos at 48%. If these tariffs were fully implemented, they could severely damage Vietnam's export-oriented economy, potentially causing stock market crashes, business bankruptcies, and soaring unemployment rates. Faced with this threat, Vietnam can no longer afford to maintain its previous balance and must take a choice between China and the US. Consequently, Vietnam swiftly adjusted its strategy and decided to lean towards the US in exchange for tariff reductions. To reassure the US, Vietnam has shown unprecedented cooperation. On April 10th, Vietnamese Deputy Prime Minister Ho Duc Phuc made an emergency trip to Washington to meet with US Treasury Secretary Scott Bessent, where the two sides agreed to initiate trade talks to address issues like fair trade and combating trade fraud. According to an exclusive Reuters report, on April 11th, the Vietnamese government had devised a plan to crack down on the re-export of Chinese goods through Vietnam to the US and tighten controls over the export of sensitive products to China. Vietnam's official website later announced that it would intensify efforts to combat domestic trade fraud, which is interpreted as a commitment to strengthening oversight of Chinese companies' re-export activities. Sources reveal that
again, this benefits them too, and they don't have to. All they have to do is show that they've got progress towards this objective, and that they're doing a better job squeezing. And as long as Trump's okay with that, they're going to be fine. They benefit again. India, all these countries, India, Vietnam, all the other countries in the Asian region, they benefit from China's demise. I'm going to keep reiterating that over and over again. We're almost halfway done with this video too.
That Vietnam hopes these measures will convince the US to reduce tariffs to 22 to 28% or even lower. To achieve this, the Vietnamese government has instructed the Ministry of Industry and Trade and Customs officials to develop a detailed action plan within 2 weeks. These actions mark Vietnam's shift from a balancer between China and the US to a gatekeeper for the US. As Business Focus analysis points out, Vietnam is at a crossroad in geopolitical and economic terms. On the one hand, it tries to curb Chinese transshipment trade to appease the US, while on the other, it struggles to fully sever its close economic ties with China. However, given the massive appeal of the
Yeah, it's between a rock and a hard place, but the consumer wins in the end, and that's what they want.
US market and the real threat of high tariffs, Vietnam is clearly more inclined to align with the US. This shift is undoubtedly a blow to the Chinese Communist Party. As ASEAN leading country, Vietnam's position could trigger a chain reaction, leading other ASEAN nations to further distance themselves from China. In response to Trump's tariff pressure, CCP General Secretary Xi Jinping is visiting Vietnam, Malaysia, and Cambodia from April 14 to 18, hoping to rally Southeast Asian countries against US tariffs. The CCP state-run media, Xinhua, has claimed that the visit is of great significance and aims to strengthen relations with ASEAN countries, building an anti-US coalition. However, just before Xi's visit, Vietnam has already clearly aligned itself with the US, delivering a direct blow to Xi Jinping. On April 10th, after a special video conference, the 10 ASEAN countries issued a statement declaring that they would not retaliate against the US tariff, but instead choose to engage in candid and constructive dialogue with the US.
So JNAP says, sounds like Vietnam is in the middle of a tug of war. It was them. If I was them, I would stop looking for Chinese investment and invest in themselves. I agree. And here's the thing. They could still get Chinese investment because if China has their companies actually building in Vietnam and not just dumping and relabeling, then the Chinese companies still get the benefit. And Vietnam gets the benefit of actually having a real workforce that isn't just swapping labels. They're doing the actual work, which means that they're going to see higher levels of employment, and they're going to see benefits from that too in their localized economy. And then you have all these people in China losing their jobs as the capital outflows increase, which is just going to happen across every level for all the reasons that I normally talk about. So you got everybody leaving China, and then still investing in Vietnam, and then at the same time, you're right, Vietnam can separate some of its dependency away from China and be more standalone, and then focus on the things they want to focus, and then while at the same time helping the United States to where these companies can't avoid the tariffs, and instead they actually have to build in Vietnam if they want to do that. Again, it's helping us in every way and helping them. All the Asian countries benefit from China's demise. You just gotta understand that.
US. ASEAN has maintained a neutral and cautious stance in the US-China rivalry, reflecting its pragmatic position. ASEAN countries clearly understand that the US market is far more critical to their economies than China. Although China is ASEAN's largest trading partner, its market appeal does not match that of the US. ASEAN is reluctant to offend the US by supporting China and prefers negotiating to secure favorable trade terms. Therefore, it can be expected that President Xi Jinping's effort to win over Asian countries to counter the US will fail. So what is the stance of other countries and regions in this US-China tariff war? Let's first look at the European Union. As the third largest economy in the world, the EU's position in the US-China trade war is particularly important. On April 8th, Chinese Premier Li Qiang spoke to the European Commission President Ursula von der Leyen, urging the EU to enhance communication and coordination and expand mutual openings, while criticizing US tariff as protectionism and economic bullying. However, von der Leyen was not persuaded and expressed concerns about Chinese products potentially flooding the EU market due to US high tariffs. She called on China to avoid escalating the trade war with the US. On April 9, the EU announced a 90-day suspension of retaliatory tariffs on US goods to negotiate more favorable trade conditions with the US. Von der Leyen even proposed that the EU and the US could achieve a...
Yeah, you do well either way, JT. You're set, man. And you know what? We're militarizing the Philippines in order to be able to ensure that if there's war, the Philippines can start firing rockets towards China and hit all their major fucking cities and military areas too. So you guys are going to have a lot of countries that are going to be heavily militarized to help save you.
Zero for zero agreement by removing tariffs on cars and industrial goods. These actions clearly indicate that the EU is more inclined to cooperate with the US rather than align with China. In fact, the EU's trade relationship with China has already experienced numerous setbacks. In 2021, the EU-China Comprehensive Investment Agreement was frozen by the European Parliament due to China's human rights issue and expansionist behavior. After the outbreak of the Russia-Ukraine war, China's support for Russia further deteriorated EU-China relations. Taiwan Defense and Security Institute researcher Shen Mingxi pointed out the EU has no reason to improve relations with China. Instead, it worries about offending Trump. Even if China tries to redirect its surplus products to the EU, the European market will struggle to absorb them. And the impact on local industries is a major concern for the EU, especially with worries over potential punitive measures from Trump. India and Australia's attitude have also disappointed China. Indian Commerce Minister Piyush Goyal publicly criticized China for dumping steel and other products and rejected BYD's proposal to set up a plant in India. India has also established an important monitoring group to prevent Chinese goods from transshipping through India to evade US tariffs. Goyal emphasized that India will prioritize trade agreements with the US, UK, and EU, clearly aligning with the US. Australian Deputy Prime Minister Richard Marles publicly rejected China's cooperation call on April 10th. Chinese ambassador to Australia, Xiao Qian, urged Australia to join forces with China to resist US tariffs, but Marles told the media that Australia would not be holding China's hand. It's about pursuing Australia's national interest, not about making common calls with China. He stressed that Australia will focus on diversifying trade and building closer ties with countries like Indonesia and India. Japan.
So again, this is great. All it does is just make it to where, yeah, I'm sure you were, JT. All it does is just make it to where all these Asian countries and the West are going to build better relationships with each other while China fails. And then they're all going to prosper together while still playing nice with China in a way, but also basically stealing all their business. This is the way. This is the path. There's no turning this around, again, unless China all of a sudden gets rid of Xi and becomes a democracy.
A traditional US ally also dealt a heavy blow to China in the trade war. On March 29th, Japan announced a 95.2% tariff on Chinese-produced graphite electrodes to prevent their low-price dumping into the Japanese market. Japanese graphite manufacturers had repeatedly complained about China's dumping practices, which harmed local businesses. An official from Japan's Ministry of Economy, Trade and Industry stated that if more unfair trade practices are discovered, similar measures might be taken against other Chinese products. Japan's actions are not only a direct response to China's economic expansion, but also echo Trump's tariff strategy. Taiwan, an important US partner, quickly responded to Trump's tariff policy. On April 10th, Taiwan's Foreign Minister Ling Chaolun confirmed that Taiwan was on the list of 75 countries to which Trump temporarily suspended tariffs, and Taiwan is now on the list for trade negotiations with the US. Taiwanese President Lai Ching-te wrote an op-ed in Bloomberg proposing 5 strategies, including reducing Taiwan-US tariffs, expanding investments in the US, and combating country of origin washing, emphasizing Taiwan's key role in the non-CC supply chain. Taiwan's proactive stance further weakens China's influence in Asia, particularly in high-tech fields like semiconductors and AI. Taiwan's growing cooperation with the US position it as a critical force in containing China's technological expansion. In stark contrast to China's setbacks, the Trump administration was swiftly consolidated its global alliance system. On April 9th, Trump announced a 90-day suspension on high tariffs on 75 countries outside China, maintaining only a 10% base tariff, successfully attracting countries to align with the US. U.S. Treasury Secretary Scott Bessent revealed that at least 15 countries have proposed trade conditions, with negotiations progressing smoothly with countries like Vietnam, Japan, and Taiwan. Trump's global tariff is a masterful strategic move. On April 2nd, he announced reciprocal tariffs on global
Falun Gong approved.
trade partners. However, on April 9th, Trump unexpectedly suspended high tariffs on 75 countries, leaving only the 10% base tariff, while raising tariffs on China from 104% to 145%. This U-turn may seem surprising, but was a carefully designed trap. Trump's strategy is clear. By temporarily easing tariff pressures on allies, he aims to secure their
Bessent even said that this was a trap that Trump had laid out for China, and they took it. Literally said that. Literally said that in an interview.
Cooperation in addressing China's unfair trade practices. White House Chief of Staff Stephen Miller praised Trump's actions for isolating the global economic aggressor, China. Trump's art of the deal not only reshaped the global trade landscape, but also regained the upper hand in the geopolitical game. Trump's strategy quickly bore fruit. On April 10th, Bessent revealed that at least 15 countries have proposed trade conditions with negotiations progressing well with Vietnam, Japan, Taiwan, and others. White House economic advisor Kevin Hassett stated that 75 countries are lining up to negotiate with the U.S., demonstrating the U.S.'s dominant position in global trade. Bessent made it clear in his speech in Washington that the U.S. will first reach trade agreements with its allies to create collective power to address China's trade imbalances. He warned the EU not to try to align with China and singled out Spain, stating that if Spain chooses China, it will be self-destructive. As for Spain, it is an anomaly in this round of the U.S.-China
Spain is like a communist regime. They're arresting people because of their beliefs, like most of Europe right now. And even Spain hasn't given much. Let's listen.
Trade war. Spain Prime Minister Pedro Sanchez visited China from April 10th to 11th, 2025. On April 11th, China announced that it had signed a comprehensive strategic partnership agreement with
So from the West, you're going to hear that Spain is on board and that the rest of Europe is coming. Here's the truth.
Spain, with a cooperation period between 2028 coinciding with Trump's term. Chinese state media hyped up the event, claiming that Spain had voted with its feet in support of China. However, the reality is far from this. Before visiting China, Prime Minister Sanchez made an unprecedented stop in Vietnam and established a comprehensive strategic partnership with Vietnam. More importantly, the China-Spain agreement only covers agriculture trade in pork and cherries, not the rumored anti-US alliance. Spain's strategy appears to be one of the balancing of both ends, securing short-term benefits from China while keeping negotiations leverage with the US. In conclusion, despite Xi Jinping's effort to break through diplomatically, his plan has largely failed. Even before his Southeast Asia tour begins, Vietnam's shift has already caused a significant blow to China. ASEAN's cold response, the EU's cautious distancing, India and Australia's clear rejections all paint a picture of China's increasing isolation on the global stage. Domestically, China's economy is mired in crisis. Foreign trade, once a major driver of the Chinese economy, is rapidly shrinking due to high tariffs. According to Shanghai Freight Industry Insiders, international freight businesses has clearly come to a halt with many.
These are getting stacked crazy high. I'm seeing some of these like 8 containers high. They're getting bad. They've completely frozen. Completely frozen. The containers are just sitting there. All the orders are gone.
Goods stuck at ports and factories due to cancelled orders. Numerous foreign trade companies already halted and are on the brink of bankruptcy. China is attempting to ease the pressure by devaluing the yuan, but this strategy poses greater risk. The People's Bank of China has lowered the yuan middle rate for 5 consecutive days, with the yuan reaching its lowest point in years. Bessent has warned that any currency devaluation will only encourage more countries to raise tariffs, further squeezing China's export space.
Again, we've talked about that too, guys. None of these other countries, including Europe, want to have dumping in their countries, destroying their manufacturing sectors. So as we tighten the vice, they tighten the vice too, which only amplifies the problem that China is experiencing.
Economist Li Hengqin has described the confrontation between Xi Jinping and Trump as a staring contest, with Xi focusing on political image than economic livelihood. If the trade war leads to business closures, rising unemployment, and social unrest, it could force Xi to blink first. However, Xi's hardline stance on high-profile diplomacy have limited his room for retreat, exacerbating his leadership crisis.
Yep. These guys are great. Again, they get a lot of shit because they're Falun Gong, because they were religiously persecuted. And so because of that, you're not supposed to trust them on their views on China. But my experience over the last, probably 6 to 7 years has been that they're a wonderful site and that they do a really great job letting you know what the truth is. Even though they are biasly against the CCP, they do a good job representing the facts. Martin says it's amazing they can just cancel the orders like that. I would think there would be a penalty. No, dude. So when you're looking at orders, could there be a penalty in some of these orders in their contracts? Maybe. But a lot of the times, no, they're just used to the order flow in China. And so they don't even worry about it because where else are they going to go, right? They're going to go to China. And so there's not a lot of penalty on numerous contracts. So they cancel the orders right away. But on top of that, is the penalty going to be more than 150%? If it's not, you're going to cancel the fucking order because it's so much money. You can't sell these fucking goods, and you certainly don't want them sitting in a warehouse. So you get rid of them. Zero Hedge said China reported 5 tons of gold purchases in February, 160K ounce per PBOC. China actually bought 50 tons of gold in February per Goldman Sachs. So they're underreporting the amount that they're buying. So a lot of the price going up on gold is just China, honestly. And I think that that's going to come to a stop, and then we have a lot of pressure that we can apply to dump that price. AJ said China faces elevated risk of lost decades Japan-style issue. I watched this debate unfold. One side argues that China is fine without the U.S. market, and the other side argues that China's going to collapse without the U.S. market. I said this is a great write-up that doesn't even factor in China's growing debt loads and just how bad the economy really is, because they've hidden 90% of their economic data from the world since the pandemic. But he talks about how Let's discuss the big picture. The allure of China was always built on three things: enormous potential market size with over a billion population, high GDP growth rate, and low-cost, high-skilled labor force. The likely loss of the main customer, the U.S., and tariffs call B and C into question. And again, it's about the consumer. It's about the buyer. It's not about the number of people that can produce the goods. If the buyer goes away, you're fucked. And he goes into some of the details of this. He says this leaves us with one enormous market size. The problem here is that China's population is forecast to decline rapidly. So he's talking about like a lot of demographics, a lot of other stuff, shows some pretty charts. But again, I do think he's right. I think that the GDP growth figures point to the same issue, a steeper issue than what we're seeing with Japan. If you look at growth in Japan, you'll see that China's growth over that period has started to plummet on average, especially in this last decade. And unemployment percent of total labor force, their numbers are complete bullshit. You can't even trust it. Population in the millions, this is wrong too. I think they're closer to 1.2 million. Again, all the data lies because the incentive is to lie. And you show me the incentive and I'll show you the outcome. And so the incentive is to, if you want more money from the centralized government, you need to have your population be higher. So that's why it's not real. Government debt to GDP, percent of GDP. This is just government debt to GDP. This number, again, obfuscated so much. It's just a complete and utter lie, this number, especially when you include shadow banking and when you include private sector debt and just all the stuff. It's a fucking disaster. And they use currency controls for a long time to try and hide this stuff. It does not matter anymore. Inflation year over year, you can't even trust these numbers. But again, just a lot of pain. And here's another one. This is traffic congestion, guys. So if you look here, the light blue is 2019. You can see how it was higher before the pandemic. Then in 2024, you can see how much lower it was then. Look at how bad 2025 is and how much earlier it is. So look at the steep drop happening in January versus what you saw later. You saw the stimulus in 2024 help their economy and boost it up. And then it rolled over later into like mid-February. We're not even fucking around this time. It's just dropping like a rock a month earlier. And it's just so much worse than what it was pre-pandemic. So the lack of traffic is a good sign of just how bad things are getting in that country. Yeah, I think that's probably where we'll stop on China right now. We've got about 17 minutes until the bell. We're going to look at a few other things here. We did a U.S. economy. We did China. Let's jump over to tariffs real quick. This is on CNN. Let's just listen real quickly here to this conversation.
Later this week, you saw a lot more clarity heading into the goal, which is get tough on China, be open to negotiate with other countries. If President Trump will sell this as a fairness issue, Americans are going to be with him. That CBS poll indicates a majority support his goals on this. Germany shouldn't be.
You can't. So real quickly, Eric says, I'm curious what the messaging and general consensus is with the Chinese population regarding to all this. You'll never know. You'll never know because they don't know. I know more about China than Chinese people do for the most part because the censorship apparatus of the the firewall, the Great Firewall, Golden Fire. I was thinking about Chinese food. I'm hungry. But the Great Firewall blocks everything and it censors everybody. So you don't all these social media sites that they have in China, you can't get the truth for more than 2 seconds. You can't get any kind of consensus if the government doesn't like it. It all goes away. So there's only from people that are bypassing VPNs, and I've got a bunch of people that follow me that tell me the truth about what's going on in China. And even though people call me a racist because I report negatively about China and have for years. These Chinese people are like, thank you for telling the truth. They're like, I wouldn't even know what's going on in China without people like you spreading the truth of what's happening. He goes, I know my local anecdotal stuff, but I don't know any more than that because you can't see it. And so it's hard. It's hard. But again, you can find the truth if you really want to. Sites like China Observer do a great job pulling that in. There's other sites that are great as well. And again, there's actual people that live in China that hide. They can only show so much, and they have to be anonymous or they'll die and be imprisoned. But they'll tell you the truth too. Even Eunice Yoon on Eunice, yeah. Even she gives you so much truth. as much as she can do without being in prison.
Taxing our cars at 100% when we tax theirs at a quarter of that. It's a basic level of fairness. You know, and Democrats, for their part, this is a big chance for them. Like Elizabeth Warren, who you had on the show earlier, she's been for tariffs her whole life, but she hates Donald Trump more than she likes the things she believes in. It's a big chance. Joe Biden added tariffs to electric vehicles and solar panels and steel and aluminum. Democrats need to work with Donald Trump to crack down on China. They are. Later this week, you saw a lot more clarity.
I love Eunice. She's a great person. She always has been. But yeah, so again, people are starting, even on CNN, you got people that are saying that these tariffs are actually going to be good and that a lot of liberals are being hypocritical. And again, we can see all the videos going back to Obama and all the Chuck Schumer and just all these people, Hillary Clinton, all these people talking about how immigration is a problem, talking about how tariffs are good to fight off Chinese stealing our jobs. And now none of that's true. Whatever. Anthony Yeo, I'm from Singapore. We have tons of, pre-COVID, we had tons of Chinese tourists. Same for Japan, but it's way lesser now. Japan and China are both hurting economies. Japan for a very long time. China picking up massively. Man, Mahindra, Jesse, don't you think the new Blue Origin crew is super cringe? Yeah. We'll see if they end up just... And again, they're riding on the Blue Origin penis rocket. And that thing, I just wouldn't trust that as much as being on like anything that SpaceX does. So they're the B team. Hopefully he doesn't lose. Somebody said, I guess we'll get to see how silicone and what do they call the stuff that you pump into people's lips, how these things operate in space. So thank you for doing your part. Man said, within the next 4 years, NVIDIA plans to produce up to $500 billion of AI infrastructure in the United States through partnerships with TSMC, Foxconn, Wistron, Amkor, and Spiel. I believe it. I don't think anybody who's telling you that NVIDIA is dead is just foolish, guys. Just foolish. They're up almost 4% today. And pre-market. So this is the one from Trump saying that nobody's getting off the hook with tariffs. He said, so I want you to hear this from his own words here. And I'm going to actually just let this play out because I don't want to talk. I need a break.
Nobody's getting off the hook % for the unfair.
I wish I had a Donald Trump voice on here.
Trade balances and non-monetary tariff barriers that other countries have used against us, especially not China, which by far treats us the worst.
Or you know what I should do? I should get a Chinese voice and have them talk about Trump's response to tariffs.
First, there was no tariff exception announced on Friday. These products are subject to the existing 20% fentanyl tariffs, and they are just moving to a different tariff and bucket. The fake news knows this, but refuses to report it. We are taking a look at semiconductors and the whole electronics supply chain in the upcoming national security tariff investigations. What has been exposed is that...
See, people don't realize this, but there's like process and research and things that are done in order to ensure that these are the right moves. And then there's a feedback loop the entire time so that they can adjust along the way. It's not like we're just winging it and throwing out fucking numbers, even though some people might want to think that.
That we need to make products in the United States and that we will not be held hostage by other countries, especially hostile trading nations like China, which will do everything within its power to disrespect the American people. We also cannot let them continue to abuse us on trade, like they have for decades. Those days are over. The golden age of America, which includes the upcoming tax and regulation cuts, a substantial amount of which was just approved by the House and Senate, will mean more and better paying jobs, making products in our nation, and treating other countries, in particular China, the same way they have treated us. The bottom line is that our country will be bigger, better, and stronger than ever before. We will make America great again.
I have no doubt that is true. You can hate Trump all you want, but I think that's very, very true. Boris AI, thank you for joining and becoming a member. You can chat now. All right, Bricks, U.S. president declares no one is getting away from these unfair trade practices, especially China. I like to get the full note because I don't like whether it's an interview or whatever it is. I want to hear the whole fucking thing. So what I do every time, guys, hey, bud, what I do every time is every time we get little quotes about different things that are in regard to trade, I go to find the whole fucking video so that I actually know the context. I know that's a novelty nowadays because people love like their 5 letters or 6, 7 letters or 7 words that say whatever, and then they can paint their own agenda around it. But I like to know the actual truth, as crazy as that might sound. I do that with everything. Elon Musk, important to note that what matters is the ability to refine rare earth elements, which are not actually meaningfully rare, and manufacture magnets for use in electric motors. People understandably tend to think that rare earth mineral deposits are what's scarce given the name. That is false. They're everywhere. As with lithium, what China has that others lack is heavy industry refining the minerals. I can see Tesla getting involved in this. I really can. I can really see this. Let me see if there's anything else. Kevin Hassett, again, said 130 countries are now involved in negotiations with us. Ralph said, hey, Chinese OEM manufacturers like Lululemon, et cetera, are intensively advertising directly on TikTok and offer the same products for a few bucks. They may want to destroy U.S. brands. That's been the whole goal. Stealing intellectual property and destroying U.S. brands is the whole fucking goal. You know what? It becomes hard to do that when you shut down the loopholes with de minimis for like companies like Shein and Temu, and then you also make it to where there's 154% tariffs on clothing elements like these, where it becomes uncompetitive, or it becomes like, why would you want this knockoff brand when you can get the real thing for about the same price? So that's what we're doing. We're fighting back against that. Also, Peter Thiel backs Trump's trade revolution targeting China. So there'll be people that tell you this is bad. It's not. This is good. We want to see this. Peter Thiel is a brilliant man. He is a part of the PayPal mafia. He is one of the smartest. He's a liberal. He's one of the first liberals that converted over to be a Trump supporter back in the day in 2016. And but he's brilliant. He's a brilliant man, akin to Elon Musk and others. And he is on board with it too. And obviously Elon is, guys. He can't tell you that he is. His brother can rail against it because he's got his own interests that deal with tariffs. But Elon is totally for what's going on right now. He literally gets off planes with Donald Trump every fucking day. Every day. Somebody found a dog. All right, multiple auto companies are shutting down, slowing down production in Canada, and instead are ramping into the United States. General Motors said that they're going to be suspending production, laying off 500 people in their vehicle EV vehicle plant in Canada. Stellantis had talked about this last week too. They're all shutting down in Canada, and they're starting to ramp up in the United States. This is some of the benefits that we get, guys. From what we're doing. I said this to Bob. I actually like Bob. He had this post up here where he said, tech stocks are set to a party like it's 1999 at the open. Looks like that will be an opportunity to sell the rip as stocks set to fully price out all negative growth policy from the new administration, even as the U.S. still faces Smoot-Hawley tariff rise, zero immigration, and fiscal cuts. So he's looking at all these things that are bad, right? He's saying it's Smoot-Hawley tariffs. I argued that it wasn't like that, and if anything, it was like the Reciprocal Tariff Act of 1934, where it's marked the beginning of the end of the issues that were happening during the Great Depression, and the market did really well afterwards. But he's looking at zero immigration as a bad thing, not that we already have 10 million plus people here that illegally immigrated over the last 4 years. And he's looking at fiscal cuts as being a bad thing because the government spending all the money and not the private sector is a good thing. He's not looking at anything pro-growth or any of the positives that come out. So he told me that what I said was nonsense, and Smoot-Hawley raised the tariff rate at a mere 6%, not 20%. If anything, that totally the totality of the expected hikes is multiples of Smoot-Hawley specific rise versus where things were coming into this year. Totally incongruous with the 1934, which kicked off a fall of 16% fall in tariffs. And I said, you're making the assumption that the goal of Trump's reciprocal tariffs isn't to lower trade barriers with the U.S., with the USA, which it is. That is the goal. Lower trade barriers, not with China, but with everybody else, and then turn them against China, which we're successfully doing. I said, anyway, again, we're on pause with the rest of the world outside of some base fees that are being used to negotiate. Also, Smoot-Hawley was the second round of tariffs. Why didn't people blame the first round at the beginning of the Roaring '20s for the demise and the start of the Great Depression? Maybe, just maybe, making these broad comparisons to completely different time frames where technology, world trade, and just about everything else was very, very different isn't a good idea. I mean, if anything, during the Great Depression, we were more like China is now. We had a large surplus with the rest of the world, and Britain was more like us, but they played it like us right now, but they played it wrong and didn't push pro-growth policies and instead increased taxes on their citizens. Kind of an amateur play, if you ask me. And then I referenced a link over here that showed that our first round of tariffs, one might argue, created the Roaring 20s, or at least was a part of that process. Isn't that fascinating? So are we at the Great Depression, or are we at the Roaring 20s with a golden age in front of us and a much better situation than they would have ever had back then, since we're not being protectionist? I don't know. MSTY makes their money from covered calls. Covered call premium is at the highest during high volatility. I think during the bear, it will perform poorly. It'll do really good on the way down. And when I say on the way down, I mean like from the beginning and maybe 60% of the way down. Then you're right. Then it'll be a grind and it will suck. I 100% agree with that. And we'll look at MSTY in a little bit here. I do agree that in the bear, Strike and Strife are going to be the better ones, even though they're just income-based and they won't be reinvested. I 100% agree with that. Yes, you're right. Mahindra, China is whining about the tariffs by posting tweets every single day. This shows that China is very nervous and alone. I agree. The Chinese embassy in the U.S., I haven't seen China. There is so much. You guys were talking about this a second ago. I haven't seen China be so aggressive on their posts in a very long time. They're just everywhere. President Xi, build and past achievements and making new advances in pursuit of shared goals is published. Okay. The U.S. side has released a memorandum exempting certain products such as computers, smartphones, blah, 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 reciprocal tariffs. China is assessing the related impact of this move. This is a small step for the U.S. side to correct its wrong practice of unilateral reciprocal tariffs. So China's all of a sudden the victim, which is hilarious. And again, just nonstop, propaganda, push. I have never seen this level of communication coming out of so many shills from China, but it's everywhere. Everywhere. Theo said, agree with MSTY, but during volatility is a good one to hedge with, just reinvest it for the payouts. Yeah, the dividends are really big while it's, if you get it while it's heading up, like let's say, here's kind of what I would say for a play, and I could be wrong, but here's kind of what I'm thinking, right? With MSTY, and I'll show you this real quick. We'll segue to that just for a second, if nothing else. So here's what's fascinating about MSTY. If you look at how it's performed, it looks like shit. So if you look at November of 2024, and then we probably need to do a comparison between MicroStrategy. So let's just look at something here. So MicroStrategy shot up really hard from September of 2024 all the way to the peak of November, right? You made 377% returns over that period of time with MicroStrategy. Way better than MSTY. Way better. So here's my theory. Ride MSTX or MSTR, like I'm going to ride MSTX up to a decent number, and then I'm going to start to delever and get into MSTR. And then when I think we're getting toppy, I'm probably going to do MSTY. And why would I do that? Let's look here. So from September low, this thing was at $18, and then it made it up to $45. So it did about a 200%, not a 300%. But then if you owned it over here, if you sold it while it was peaking out over in October, and you were seeing such a massive move in MicroStrategy, if you sold it over here, then you got a dividend of $4.42 when it was in the 40s. That's like a great dividend. And then you got another one over here for $3 and change. And then you got another one at $2.27 and change. And then another one at $2 and change. And then another one at $1.37. If you looked at all of this, you actually would only be down like 25% or something from the top down to the bottom, 25 to 30%, which was infinitely better than what MSTR did, right? MSTR was down 57%. So you're lowering your downside risk while getting paid out during the attrition. And then I think what happens next, then if you're in like a Strike or a Strife, you can switch over and start to get paid 8 or 10% during the rest of the bear. So if you think we've peaked, you could do this and limit your downside risk while still getting a nice dividend. And if it hasn't peaked, you get that dividend. Ding, ding, ding. We can jump over to that in a second. You can get that dividend. But otherwise, once you think that it's kind of over, you jump out of that, you jump into Strike or Strife, and you do really well. That's kind of my game.
Interest income was good too, but when you take a look
at
investment banking, look, they're just dead underwriting.
That's my plan for now. I'll let you guys know if that updates.
No, they're not. But that's not an important component. I mean, global banking and markets is $10.71 billion. That's where, yes, and advisory and equity underwriting is
Sorry,
part of that.
Some stuff around here.
It's a great quarter.
Right. It was a good quarter. Big buyback, as you say. Call begins right now. The conference call and the commentary.
I'm going to leave you guys for 1 second here, okay?
So we're going to watch out for that.
I think, Carl, when you look at Goldman, what they've
Give me
excelled
1
at
second
is
here.
not having a lot of people when things are in divisions that aren't good. I remember there was a quarter where I went downstairs to the 27th floor, the municipal bond floor. It was empty. It was empty.
Let's get an opening bell here at the CNBC Real-Time Exchange. At the big board, it is MSNBC Films, Sky Studios, Paradigm Productions, and White Horse Pictures celebrating the upcoming premiere of David Frost Versus, a 6-part documentary series. Our friend Wilfred Frost doing the honors. Wilf's going to be on Money Movers at 11 a.m. Eastern at the NASDAQ. Skyline Builders, a Hong Kong-based construction company celebrating its recent listing. Have you guys managed to see any of Wilf's episodes?
Well, Wilf and I sat next to each other for a number of years when he was obviously down here every day. And so we would talk about it a lot, and I would watch some of the clips that he was then, or things that he was then working with. It was excellent.
Well, I had the fortunate nature of watching the whole thing when I was younger. I never missed Frost, including the Frost Nixon tapes, which is maybe the best series of interviews I've ever seen.
Yes, and then the Ali episode.
Oh, yeah.
The way they weave in.
Did we get the bell? We got the bell. Let me just,
the events of the
adjust this and pull it down real quick here. We'll start to look at how things are doing this morning. Thank you to Daniel for becoming a member. I appreciate you, sir. Let's pull over and look at the stock heat map and just get a little bit of a bead on it. Oh, I dragged that too far. Let me see over here. There we go. And I'm going to move this from pre-market. This is where we were at pre-market to closer to representation right now. And it doesn't look too crazy different. So we're seeing a little bit of a retrace after this. This is just a little bit delayed. So we're seeing Mara coming down to 2%, CleanSpark down to 2.8%, MicroStrategy at 2.8%. We're just kind of bouncing around. Tesla's starting to take off 3.3%, looking good. So the Bitcoin side of things just retraced just a little bit right at the bell. Looks really good though, guys. If you look down in the bottom corner, I'll just zoom in a little bit here. You could see just a really beautiful retrace, and I'll bring it to the daily to where it just looks cleaner. If you look over here, this is exactly what you want to see. We didn't have a gap on the CME, and that's the Chicago Mercantile Exchange. There's a pattern where yeah, exactly, the gap's closing, Alex Garcia, where what can happen is you can get a big pump in the weekend in Bitcoin or something like it because it's 24/7, 7 days a week. And then what will happen is it'll retrace Monday morning in order to be able to get back to close that gap just based on volatility and liquidity. And then you'll start to take off again. So we could be seeing something like that. I do think today should be a pretty positive day. I don't see a lot of reason to be negative at all today. I think that a lot of the news is really good. So if anything, I just see a second round of us going up. Honestly, I think that's what we're going to see today. And I think that if we just look here, that's what we're seeing across markets. The health services sector isn't doing very well, but everything else is looking great. Look at Apple, up over 6% on the day, guys. That's just a crazy number of return. So again, this is kind of what I'm expecting. This is in line with my view of what we should see today. I don't know if there's anything else. Let's look over here. Wholesale inventories. We already saw that. Consumer confidence comes out at 10. That's not really going to matter. We already talked about that. And the fear and greed, let's see if it's updated to where it's at. I also want to look at rate cuts and see what we're looking at. Let's see here. So, guys, MSTY will get destroyed on the bear. The dividend will not. Yeah, no, that's exactly what I already said. But if you look, the dividend on the initial part of the bear actually limits your downside risk a ton. So instead of seeing like a 56% down, you would have saw like a 25 to 30% down, which is a much different number. So the MSTY does good, I think, near the top. If you think we're getting toppy, that's a decent one. And then you can always jump into strike and strive. So, or have a combination thereof. SMCI calls looking good. Yeah, it's up about 4.6% right now, which is a pretty good number. MP printing on a megaphone on the daily. If Ukraine deal is announced, it's mooning. Do they have what do they have? How would the Ukraine deal impact them? Do they have any? I guess I don't know. I don't know what MP's relationship is with Ukraine. If they're going to be a part of that or what, or if you just see that, if you're just speculating on it. All right, let me look here. Let me refresh. That didn't come up. All right, so May. May, it looks like, what do we have? We're at 425 right now, right? 425 to 50. Yeah, okay, so it's telling us we only have a 15% chance of a rate cut right now. That's possible. Sawyer, did you already look at Bill Maher talking about his experience meeting Trump? Yeah, he loved him. He really likes him. It's amazing. Christopher, rare earth, the buffer from Russia will be American corporations as energy and rare earth. Yeah, I could see that. I just don't know if they're going to directly benefit, but I can see how people speculating on that would be a big thing. That would make sense. I'm going to zoom in on the bottom left here to better represent this nice support zone that we're finding here. We broke above it. We back tested it on the daily on Friday, and then we're bouncing back up today. This is just a great way to have a continuation pattern. Even if you just grind over here for a few days, it's still a breakout pattern. It's a really positive pattern, and I don't think it'll take that long. Let me get back over here, though. I'm going to actually jump real quickly here to the Trump section of this. So some good news in regard to voting and, again, the Republican Party is just that all 15 Arizona counties have begun the process of verifying and removing non-citizens from their voter rolls. That could be as many as 50,000 people. So that will make for a better election this next time. I also put Democrats are blocking efforts to remove Social Security numbers from illegal aliens. You can't make this shit up. This says federal agencies like the Social Security Administration are filled with Democrats who believe it is in their duty to resist President Trump's agenda. Associate Commissioner Greg Pierre opposed Trump's effort to revoke Social Security numbers for illegals and was actively subverting the DOJ team. Security was eventually required to forcibly remove him from the building after he was placed on administrative relief. Again, just a lot of obstructionists. Also, this is the post that I was talking about. Shea put it out there. He said TSM starts their third Arizona fab in June, accelerating plans amid tariff risk, prepping packaging equipment as part of the $165 billion investment push. So people talk about how, America is good. All these bad things are happening because of the tariffs. This is not one of them, I guess. This is so odd. PETA, the animal rights group, praises Trump admin for phasing out cruel tests on dogs and other animals. It's so weird to have PETA on the same side as Trump. Heritage Foundation. So again, this is the Department of Education. Not a lot of people like this one, but this shows since 1970 the spending on the Department of Education versus the reading scores, math scores, and science scores of people over that time. This only goes up to like 2015, but it's a joke, right? This is a joke. It shows that this administrative bureaucracy has done nothing real world to actually help, and it's only gotten worse since this data was published. So I put this as a prime example as to why the Department of Education needs to be abolished and why education needs to be reinvented with AI and an understanding of prompting, because we can do much better with much less, and that should be the goal. FEMA, there was this headline that FEMA will stop 100% of cost sharing in Helene recovery. So making it look like Trump isn't helping the people of North Carolina. The truth is they're going to be doing a 75% reimbursement for ongoing recovery efforts. So they basically start to phase out. They've done a lot already. So that's the truth. But again, sometimes the headlines, if you're a headline reader, you're never going to get the truth. Elon put bureaucracy undermines democracy. So I'm going to go ahead and let Stephen Miller talk about this one on his own.
You're tempting me to say some very harsh things about some of our media friends. Yes, it is true that many of the people in this room for 4 years failed to cover the fact that Joe Biden was mentally incompetent and was not running the country. It is also true that many people in this room who have used this talking point that Elon is not elected fail to understand how government works. So I'm glad for the opportunity for a brief civics lesson. A president is elected by the whole American people. He's the only official in the entire government that is elected by the entire nation, right? Judges are appointed, members of Congress are elected at the district or state level, which is one man. And the Constitution, Article 2, has a clause known as the vesting clause. And it
I love Stephen Miller. He is so brilliant, and he knows everything about government.
Says the executive power shall be vested in a president, singular. The whole will of democracy is imbued into the elected president. That president then appoints staff to then impose that democratic will onto the government. The threat to democracy, indeed the existential threat to democracy, is the unelected bureaucracy of lifetime tenured civil servants who believe they answer to no one, who believe they can do whatever they want without consequence, who believe they can set their own agenda no matter what Americans vote for.
100% agree with that. 100%. Very thoughtful. And again, report Chinese national and New Jersey sushi shop owner Mingji Zhang has been arrested by ICE. In 2024, he was arrested for illegally acting as an agent of the Chinese government. Okay, that's probably one to get rid of. Meta Platforms is enduring antitrust allegations where they're going to be looking to maybe separate them from Instagram. That would be huge. Also, again, Josh Hawley has been saying and has had interviews with a former employee that basically says that they were working with the CCP to undermine American interests and then also give them technology and censorship tools that they shouldn't have. Not a great look. Not a great look at all. You can grow your hair out. You can start wrestling other men, but that doesn't necessarily make you a good person. China emits more CO2 than the rest of the entire world, developed world combined. But hey, let's blame cow burps instead. Just look at that. Look at that. Look at that. The smog that you see. Again, they had to shut down. When they had the Beijing Olympics. They had to shut down every industrial manufacturing facility anywhere around the city. And the outskirts of it for a week in advance to make the air look clean. This is the reality of China on an average day. Press secretary say the SAVE Act is a common sense measure. It would require proof of citizenship in our elections. The Democrats have been fear-mongering. This is great. Again, it's good to have this kind of stuff happening. And I love it. Farzad said America is healing. A united America is unstoppable. The world is going to get so much better. You got to realize, I'm going to let this play, but Bill Maher, this is just a small segment of it. Bill Maher has a huge audience, and there are people, the far left has left him, but the center left, the right left, kind of, like the people that are classic liberals, they listen to him intently because he's thoughtful. And even when I didn't like Bill Maher, I still thought he was thoughtful. And so, again, they're listening to this guy and they're starting to like Trump more.
At one point,
or hate him less.
We were walking through it is an amazing tour of the whole house. And I don't remember exactly what we were talking about, but it must have been something with the 2020 election, because I know he used the word lost. And I distinctly remember saying, wow, I never thought I'd hear you say that. He didn't get mad. He's much more self-aware than he lets on in public. Look, I get it. It doesn't matter who he is at a private dinner with a comedian. It matters who he is on the world stage. I'm just taking as a positive that this person exists, because everything I've ever not liked about him was, I swear to God, absent, at least on this night with this guy. Bob, Kid Rock, told me the night before, he said, if you want to get a word in edgewise, you're going to have to cut him off. He'll just go on. Not at all. I've had so many conversations with prominent people who are much less connected, people who don't look you in the eye, people who don't really listen because they just want to get to their next thing, people whose response to things you say just doesn't track, like, what? None of that with him. And he mostly steered the conversation to, what do you think about this? I know, your mind is blown, so's mine.
But yeah, there was a lot more to the interview than that, but it was great. It was great. He was really impressed by Trump, and I think that's wonderful. Billionaire Chamath Palihapitiya praises Trump's tariffs on China, rips the global elite. I don't know if I played this one already. I probably did on Friday. We'll leave it alone. I think we'll stop here. So 8:44. We're a little bit before 9, but we've got no real data coming out. Looks like we're retracing a little bit and back testing today on some things. All in all, though, Palantir up 5. Let's just look at that. Let's look at the heat map again. Let's go back over here. So Amazon coming down. That's probably going to happen. That makes sense. AVGo's coming down. Apple's retracing a little bit, but still up 4% on the day. I'd say none of this looks crazy. I think a consolidation is an okay thing for today. I do think, though, that Bitcoin goes higher. and we'll see what happens with traditional markets. Again, I'm not leveraged on Tesla right now, guys, even though it's down quite a bit. Let's just look at some of these tickers. Tesla is down. Well, how far did they go? Let's see. That's not the right line. They went down a total of almost 56%. And then right now they're down about 47% from the all-time high. That leaves a lot of room to go higher. Let's just look at this real quick here. And again, it's kind of consolidating. It's a little bit underneath the volume profile right now. And again, this is the red line right here. It's underneath that. But what is the upside just to get back to the previous high? 91% to get back from the previous high. And again, we've dropped a lot. Could we consolidate more in this range, though, with Tesla in stocks? I think stocks could still consolidate. I think Bitcoin is the thing that's going to kind of be the leader in the weeks ahead. And so, again, that's why I'm not balls deep in this one. Also, just risks of retaliation. Literally, I watched a video just yesterday, and there were the UFC fights. And so Trump was there, and Elon was there, and like a bunch of people were there. Trump was actually there with his granddaughter and one of his grandsons, but they got on Air Force One. They hang out all the time. I saw Elon getting out of a limo with Trump, riding literally with him, and his boy little X, and then they went into Air Force One. China's got to be seeing how close Elon Musk is with Trump, and so again, I just have worries that some of that might come back to bite. But let's zoom out here a little bit, though, and maybe switch to the monthly. I just want to look at this here. This is still a brilliant consolidation. And on the monthly time frame, if we end with a wick anywhere around where we are right here, that double wick monthly bottom thing is it's a good sign that we're getting close. But if we look over here and we look at the volume, I'm going to get rid of this older time frame because it'll skew some of the data points. I want to see what the volume looks like up here, right? So it should recalc in a second here. Let me just do this maybe. There we go. That's better. So actually looking good. If you zoom in and look at all the volume, we're still above this shelf. We kind of want to stay above the 244 range. And if we can do that, we probably won't even test back down here again, and then we could end up going higher. I'm just worried about that risk, but I've got about 400,000 sitting in Tesla stock right now, not TSLL. It's probably good that I'm not leveraged on everything. And we'll see how the rest of it does. Could still see these things retracing. I see MicroStrategy only up 1%. Mara up less than 1%, CleanSpark up a little less than 2%, Iron is flat down to red. So we're seeing a little bit of retracing, and again, SMCI is down to 3 now, or up 3, but that's down from the 6% it was up in pre-market. We're actually seeing TLT getting a bounce today. Let's see what the 10-year is doing. Let's see how that's playing out. So the 10-year continues to drop. We're kind of getting this indecision candle almost over here. This is on the monthly time frame, though. Let's look over here and see it. The week closed up very strong, but again, I think that the trend is still rolling over. Down 2.2% almost on the day. The 2-year is down 2% on the day. Let's see how the dollar's up just a hair, and oil's at 61.67. So, doing all right. I still love, though, that, guys, this consolidation is fine. I'm just going to show you the S&P real quick, and then we can, if you guys have anything you want to look at, let me know. Trump, the best definition of intelligence is the ability to predict the future. I agree. I mean, at least your ability to be, there's so many different levels of intelligence. It's hard to quantify it all. But I do like this. I like, if we look at the weekly especially, let me go back here. I like that we were able to get this wicked bounce above this fib level, this fib retracement level. And again, if we look out here, this is tight across the board. We're getting close to this next volume shelf. If we can break above that, that'll be great. We could have some friction underneath this neckline for a while, but I think a consolidation into this range, if anything, will just give us more of a bullish potential going forward if we do that for a week or two. We'll see what happens. I'm not as bullish on the S&P and the NASDAQ and those things right now as I am. Like, I could see consolidation there. I'm more bullish on Bitcoin. I'm just more bullish on Bitcoin right now. What else do you guys have? Can we review the USD JPY charts? Sure. I think I got one of those somewhere. Let me see here. That's the CNY. Let me see what I got. I got the Chinese yuan, but we can pull that up too. So you're seeing the Chinese yuan take a step back Again, they're protecting these levels down here. They don't want to break underneath like 734. It's getting real close. So they don't want to see that happening. So they're doing the best they can to still hold their peg. Let's look at the USD versus, oh, I hit the wrong button there. Let's look at the USD versus the JPY. Oh, I don't know. I don't want a special offer. 80% off. That's a pretty good offer, though. So, again, we saw heading towards the precipice with the US dollar versus the Japanese yen. When it climbs, when you see the dollar climbing against the yen, that's when you're in the danger of the Japanese yen carry trade, right? It's been going in the opposite direction, though, because the US dollar has been weakening. And so you're seeing the yen actually gain in strength. So I don't know. I don't see a lot of bad things happening right now. If anything, I think we're away from the crazy edges of the cliff. Sawyer, going balls deep in MSTX for income to buy more Bitcoin. I mean, it's not really income. It's a 2x leverage play. So you're looking for MSTR to launch. You're looking for it to go higher. Right now, it is up 2.53% as we do start to get a little bit of a bounce on our Bitcoin plays, which I love seeing. All right, what else we got here? Let me just go back. I'll go to the stock heat map while we're waiting. All right, Alex, OFC, BTC pumps all weekend and goes down at open on Monday. Yeah, close that gap. That's what happens a lot of the time. TT feels like sell into the morning and then a bounce into lunchtime. I could see that. Sea-Dog, unless, again, we're very news-driven right now, guys. On the macro side, what makes TLT move higher? Not seeing foreign. So again, we get to Wednesday, we get data that's going to be helpful on that picture. So on Wednesday, we get net long-term tick flows, and then we get foreign bond investment, and then overall net capital flows. This will give us a good picture. This is just February, but it'll give us some picture into what's been going on in markets recently. March would be better. We might not get anything too terribly insightful because, again, it is February data. But it should give us an idea if people were starting to dump. Because we knew in February, at least by the end of it, we had some idea that, like, things are getting more interesting with tariffs and all this other stuff. But March is going to be the most impactful. So, again, maybe we're a month out until we see something really clear. But seeing that foreign investors aren't fleeing the United States, seeing that they're not selling off our treasuries and realizing that maybe it was something where the over-leveraged hedge funds were getting butchered, whether they're in Japan or other parts of the world like the United States, that would be a better sign that I think would allow this to roll over more. The Fed lowering rates would help. The supplemental leverage ratio being adjusted would probably get us 50 bips. There's a number of things that can help. I just don't know if it's going to happen right away. But we'll see. We might have seen the peaks of what can happen with the yields going higher. Usually when everybody's talking about it being the end of America, that's usually the time you stop. So we'll see. Jesse, when will you start deleveraging from MSTX? I don't know. I'll probably do it in small amounts on the way up as MicroStrategy goes higher. And I'll be looking at MicroStrategy, that asset, as the tool. Right now, I don't care too much, right? Where I care more maybe around, honestly, I don't even care here. I think this is like a W bottom or a triple bottom. I think Bitcoin was that too. Like 1, 2, 3, right? Depending on how you look at it. So I think we're going higher. So I'm really not caring here. Where would I deleverage? I'll probably start selling some. Maybe in the 360, I'll sell a tiny amount. I'll sell more over here around the 430 range. I'll sell more when we hit our new all-time high around 530. And then I'll be looking to, like, I don't know, I might be, I don't want to say 100% out, but maybe I have 20% of my MSTX still left or 25% at this level. And then I'll want to be 100% out by the time we get to the 642 range. That's kind of my thought process there. That's like a 100% move on it. And that's just for MSTX, guys. And I don't know, I might sell even slower than that. I haven't really thought about it in depth, and that can change over time, but I'll always let you guys know. But again, you just have to remember this. You have to remember that from September, let's look over here. From September, down at the lows here at the beginning of September, to up over here in November, This bitch went up 368%. So right now, from the bottom, if we go to just the next .618 level, we'll have only went up 181%. So I still think that there's a possibility later this year that we get to the 850s. So I'm still thinking we can go a lot higher. But again, this is be turning into a big cap. If we go up 176% from where we're at today, this is an $82 billion market cap. 100% move, getting close to that .618 level. That already turns us into like 160 billion. And then if we do this other one, we're over $200 billion for the market cap of this company, which is phenomenal. That's actually, I mean, we're talking about if we get up to this level in the 800s, guys, that means the market cap for this company is close to what Palantir is today. So it's going to be a big player. But I wouldn't get too greedy. At this level, I'd probably be 100% out. I'd probably be 100% out, and probably in like MSTY or Strike or Strife to get some kind of yield. I greatly enjoy your morning analysis, says Sweet Biddy McGee. Thank you. I appreciate that, my friend. When you get some time, let me go back up here. OSC Poems. Hey, Jesse, good morning. Wanted to know your thoughts on MSTY. I've actually talked about it a lot in this video, so you might want to go back. Amit, Jesse, when you start, that was you. Christopher, when you get some time, I strongly suggest looking at PCT from a fundamental view. What is it, Christopher? Can you give me a quick summary? Sawyer, can we look at ARKG and where do you want to get your calls? Oh, gosh, yeah. ARKG, it's up about 1% today. It was up 9% the other day off a massive drop. You got to remember, this thing went down, guys. To give perspective, this thing was down 85% from its high. And its high is a long time ago. Like right now, we're talking almost 1,600 days ago, 1,500 plus days ago, that this thing was at a high. So it's been well over 4 years. And we're due, I mean, we're at the bottom. Like, just look at these numbers. We're at the bottom over here. So what do I think can happen with ARKG? Right now, they're at an AUM, assets under management, of about $898 million. I don't think it would be crazy for this thing to go up 100% up to this 40 range. I really don't think it would be crazy. By the end of 2020, or let me put it this way, the beginning of 2026, I don't think it would be crazy for it to get up into this 40s range and for me to dump a lot of my January calls. And then I'd have 6 more months for this thing to climb even higher, to get up into the 60s or maybe even the 70 range. I don't think it's crazy. This could happen even sooner. If we turn into a risk-on market because tariffs aren't as big of a deal and we can see how we're benefiting from what's happening from our China deleveraging, and we're seeing lots of growth in the United States, and we're seeing the positives of a low tax environment and investments coming into the U.S. and a low dollar. And we're not as worried about refinancing our debt, and Scott Bessent's doing a good job managing it, which again, I think he's probably one of the most brilliant people to do it. Then I don't think it's crazy to think this thing gets to 2 billion in AUM or 3 billion in AUM. Which would put us closer to up. If it did that, it would be closer up to here in the 70s. And the amount of money I make from that is just fucking ridiculous. So I'll be selling some when we get up to probably the Januaries. I'll be selling my calls for January when we get up into the 37 range, like selling a decent chunk of those since they're 50 strikes. And then I'll probably be fully out of the January calls by the time we get into the 40s. And then I'll have my Junes. But I could make $5 million on this trade conservatively with everything that I have in these right now. Did I grab any leaps? I'm not sure what we're talking. I'll try and get caught up with that in a second. So yeah, I really like that trade right now. Sorry if you already discussed this. Do you plan on re-entering TLT? I might, but I'm just not interested right now. And the 20-year just isn't moving as much as I would like it to. I think it's the lower end of the curves that are going to be moving. So I might be doing a different trade completely. Stubble, Jesse, good morning. Can you please look at Palantir analysis? I think Palantir is running off of a different story. I think Palantir is running right now based upon that news that they've got a contract where they're going to be benefiting from what's going on in the government. And again, they closed this other gap here that's dead. We didn't get back down to the second one, and we got a third one over here, and we got other gaps over here too, like boom, 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 But I don't know. We'll see what happens with Palantir. It all depends on what happens with the markets. I still don't love the valuation. And why don't I love it? It's $220 billion right now. If we look over here, if the bears are right about any kind of slowdown or any kind of stagflation event, Bitcoin's going to do really good. You know what won't probably do good? Palantir, unless they get just a bunch of government contracts and the fundamentals keep kicking ass. And they're doing great. I mean, look at the revenue. Look at the revenue per client. Look at the billings. Look at the cash flow. All this stuff is great. But they're still diluting shareholders. They've got tons of cash, $5 billion plus, very little debt. But their forward PE is 145, and their current PE ratio is almost 500. Let's compare that to Tesla. So 144 and 500. Let's look at what Tesla's at. And I would argue that Tesla has a lot more really beneficial things sitting in front of it. They have a PE or forward PE that's half that number, and that's 1/3 of the PE ratio of Palantir right now. So I would say Tesla is the safer bet right now based upon everything we know about this company. And again, their cash pile, also pretty good, much bigger, $36.5 billion and $10 billion in debt. This company is so well positioned. I like Tesla better than Palantir right now. Even though I love Palantir as a company, I love what they represent, and I think we're going to need them a lot. They'll probably be a really great hedge if we have war. So if things get weird, then it'll be good for that. I just don't know how much short-term upside they have unless we start to see some really fruitful numbers in this next quarter. If they have a bad quarter, they are fucked. One bad quarter, and you will see that stock plummet like a rock. That's my take. Matthew Purdy, we've had trade deals that will start to trickle in soon. I agree. Lots of them. 130 nations that we're doing deals with. We've got really positive feedback indicating that trade deals are going to be coming in. We're going to see more businesses talk about building in the United States. We're going to hear about the gold card this week. We're going to hear more talk about getting the bills pushed that create a lower tax environment in the United States and lock in a lot of the things that we're doing. There's going to be a lot of really positive tailwinds coming in the future, I think, guys. That's what I would focus on. I greatly enjoy your morning. Thank you for that, Sawyer. Plus, they have more Bitcoin than the last run. Not sure what we're talking about. Probably MicroStrategy, maybe. Thoughts on CRISPR? I don't invest in CRISPR, but I believe ARKG is invested in CRISPR, which is great because I own a lot of ARKG. So if CRISPR does well, then I should do well. Let's just look here. So, CRISPR is the third largest holding for ARKG. RXRX is the first, 129 million. Tempus AI, 116. CRISPR, 107. A lot of these companies don't make any fucking money. But if one of them comes on to some revolutionary thing, then ARKG goes to the moon, and then everybody starts to speculate on the rest. And when you have 36 companies in your holding, or I should say 35 companies in your holdings, that, you know, and really, as far as your largest holdings, you've probably got like, what, 20? Probably like 15, something like that. If any of those do really good, it's just going to be amazing. A's Refuel. We got some talk about tariffs. I want to hear this, actually. This is tariff talk going on right now on CNBC. Let's listen to it.
Are saying on the call this hour, those shares have given back some of the gains of about 1% right now.
Because it is not as it all would appear. And Megan, perhaps you can explain to us what may be yet to come when it comes to these potential exemptions getting rolled back.
Yes, there's a lot to unpack here, David. So the tariff exemptions that the White House had repeatedly vowed would not be coming, of course, showed up this weekend. A handful of consumer goods, mostly technology,
I think Kevin
as you guys said, and as you can see
or it might
on your
be an
screen
old
here,
interview, we'll
all
see.
now exempt from the 125% so-called reciprocal tariff on imports from China. They are, though, still subject to the 20% tariff imposed over fentanyl concerns earlier in the term. But administration officials have spent 2 days now essentially saying not to read too much into these exemptions. Here's Kevin Hassett talking to reporters this morning.
Pretty much everything's going to be covered. The question is which law applies. And so if there's something that has a national security effect on things, so if we buy it from some other country, then we might be unprepared in time of war if they were to turn off that thing, then that's going to be in a 232 bucket. But then we've got the reciprocal bucket, which is kind of most everything else.
So Hassett and other officials are doing a few things here. They are first trying to knock down any criticism that the president is backing down in his tariff fight by carving out these items. They're also,
I think Trump did a pretty good job himself with that, but yeah.
Highlighting.
Hey guys, we're getting the bounce too on Bitcoin and everything else. We'll show that in a second. But essentially it's working out just like we said. We retraced, we closed some gaps, and now we're looking to head higher.
That 20% tariff still applies, and they are emphasizing that more tariffs on these goods may still be coming. Remember, guys, we've talked about this, but certain goods were always excluded from the reciprocal tariffs. Copper, lumber, semiconductors, and pharmaceuticals all on that list because the White House has long been looking at imposing national security tariffs under what's known
And it's been this way, guys. I don't understand why people don't know this.
as Section 232 on those items. Phones and computers were not initially on that list, but a White House official.
All right, this is awesome. Rachel Fang says, I'm from California, but I live in China right now, next door to DeepSeek. I can say Jesse is pretty spot on. Economy just isn't doing great. Thank you. I get that kind of feedback a lot from people that live in the region or that are visiting or that know it really well, and they repeat that same thing. So I really appreciate you saying that, Rachel. It gives me a little bit of credibility, so thank you.
Just this morning told me that they could now be lumped into the semiconductor investigation because phones and computers, of course, are downstream users of chips. Guys?
All right, Megan. So, yeah, do we have any sense as to where we stand then on phones or on servers or laptops, for example? And here
we'll know in a week or two.
Key names would be Apple and Dell and HP, all of which are up today. But, of course, there continue to be real questions as to what the ultimate tariffs will be on their products.
Absolutely. We're mostly in a holding pattern, a wait and see. When I spoke to this official, the sense that I got is that the White House is not looking at a separate investigation on those items. They would have to, for example, launch an investigation saying that iPhones are a threat to national security and then imposing tariffs specifically on iPhones or smartphones more broadly. That does not seem to be in the cards at this point. But what they are saying is that this broader 232 investigation, as it's called, into semiconductors could ultimately lump in some users of semiconductors, and that could include smartphones and laptops and other things that semiconductors are put into. It's not.
Yeah, and we'll know more in a week or two. I think that's probably it for this. History Guy Scalp says Palantir big for Doge and implementation of efficient modern government IT. They could be like if they really start to show, like, let's say their earnings come up. And when are their earnings? Let me go back here. Palantir earnings. Not until May 12th. Okay, so we're a ways out. We're about a month off. If they had earnings that were really positive, and they show that they're starting to get more from government because like these Doge activities or anything like that, then it's through the roof. They can continue to go higher and scream higher, especially if the macro is doing all right. What I'm worried about is we've still got a lot of gaps. Again, we got one over here we didn't close. I don't think. I'd have to look at it again. We got this one down here. We got bigger ones going all the way down. Most of those are going to be left open. I don't think they're going to go to it at all. But could we still have some kind of weird move where we break down and we close part of this gap in the 40s? I think that's possible. One bad earnings report where it's not better than expected, and Palantir will lose that premium on their PE ratio and all the other factors. So just remember that. I do think it's great, though. I do think it's a great company, and I think it's going to do really well. It's just not the horse that I'm picking right now. I'd much rather be in Bitcoin-related investments and some others. Again, Tesla has risk right now, too. But I still love it, and I'm going to buy it. And as I make a bunch of money off of Bitcoin, if some of these other things don't do well, like let's say that traditional markets and the S&P are still start to lag and Bitcoin starts to do better, instead of just dumping in cash, I might buy like some Palantir. I might buy some Tesla stock. And maybe even if these things do worse, I might put some of that into leverage. But really, I'm trying to be somewhat conservative. I've got a lot of pans in the fryer. I don't know, whatever the saying is. I got a lot going on, and I think I could still make 20 million this year, even though I'm just around 3 right now. in my portfolio. So if that happens, I'm going to start to diversifying into these other plays, and I don't need too much leverage right now. I just don't want it. Anyway, I love you guys. I hope you had a great day. Again, I just want you to realize that China is not doing very well right now. They need to start playing nicer with the United States. If they do that, I think it'll benefit all of us, and we will just immediately be set off for the golden age. If we can find some humbleness from Xi, and I don't know if it's possible, but I like to believe that it is, and we can start to become allies with each other, I think that would be hugely beneficial for the entirety of the world. And I hope that's what happens. And if that doesn't happen, then they lose. And I really don't want to see the Chinese people lose. I want to see them gain. And we get that from working with each other. And if we don't, it's just going to be destructive as hell. But either way, we win, because the rest of Southeast Asia will benefit greatly. And will benefit greatly. So either way, we're getting to a golden age. I would just like to avoid a war, and I would like everybody to benefit. All right, we're going to end on this note. We got some Xi Jinping with the little Winnie the Pooh in his little car. And you guys take it easy. I will see you tomorrow. Oh, by the way, I'm finishing my taxes right now. $170,000 I owe the IRS. Ugh. I'm going to be doing my business expenses. Hopefully it brings that number down. But not a lot of fun. My biggest tax bill by far. I'm sure next year will be even worse. Don't love it. Don't love it. That's more than I used to ever, like my wife and I made combined in income for a while. And now I'm just giving it to the man. It sucks, but you got to do what you got to do until they can abolish the IRS. That's what we got to do. So love you guys. I'll see you tomorrow. Peace out. Okay. Bye.